Good afternoon and welcome to all present here. So request all the participants to please settle down at the back also. Thank you. I'm Arun Kumar, Head Digital Partnerships and Innovation. Welcome you all to the event. And I request all the participants to actively participate as we have done our enough to invite all the eminent speakers from the industry, from the digital space. And I expect that you all will enthusiastically be a part of this event, attend all the sessions, and definitely enjoy the natural surroundings after the sessions. So, and we have sessions spread across from today, we have the sessions in this main hall, and then spread across in our two halls. One would be this ballroom, and another across the road, we call it Betul. So we'll be guiding you as we move ahead with the session. And now I would request, and in fact I would invite Kristen Zedek, the MC for the event for next 3 days. She'll be with you. Thank you.
Hello, hello, hello. Can I see a wave of hands? Okay, so I want some energy in the room today, okay? So how are you all doing today? Okay, the ones wearing the mask, you can still speak. I can still hear. To be here. Who all are happy to be in Goa? We're in Goa. Imagine 2 years of not seeing people. We're in Goa today. How awesome is that? Can we just clap for ourselves just because we are here? We have made this happen. Isn't it exciting? I love it. How many of you have come here with your families? None. Okay, so on that, let me tell you this video that I saw today. It said this guy was driving, okay, and he parked his car and he says, you know what? My wife and I decided not to have kids. He says, we didn't have a problem. Our families didn't have a problem. Our friends didn't have a problem. But only our kids had a problem. So those of you who get the joke, you can laugh. But those of you who didn't, ask me later, I'll tell you. So my name is Christine Zedek, and I'm going to be your host for the next 3 days. So bear with me. I would love to have a lot of energy from all of you. Is that a promise? Yes? Okay, it's going to be interactive. It's going to be fun. We have so much in store for all of you. So stay attended, and we are going to start today with a bang. All right? So I'm going to switch my mic and move to this one. Okay, so let me now make it all official. Welcome to the inaugural edition of Bob World Digital Conclave 2022. Oh, I love your energy. You guys are awesome. Digital transformation is a buzzword everywhere you go. And why shouldn't it be, right? Technology has impacted almost every aspect of our lives, especially shopping, women, yes? Shopping, entertainment, travel, and communications, which forms major dimensions of our personal lives. On the occasion of its 114th Foundation Day 2021, Bank of Baroda re-emphasized its intent for digital transformation and its aspiration to be the best digital bank by unveiling its sub-brand, Bob World. I think we can clap now on that. Yes, people, come on, Bob World. Super. It represented the bank's desire to open up a world of endless possibilities in banking and beyond. The tangible manifestation of this was the launch of its super app that offered customers exciting digital banking products right across the spectrum. But as we all know, success lies in reaching the product to customers. Bob World has already engaged over, any guesses how many customers? Anybody? Well, let me be the one to tell you then. Over 2 crore users. That's a big wow. To celebrate this phenomenal success, but equally to garner profound insights, is this very special event we have all come here together for. The first ever edition of Bob World Digital Conclave, which is, of course, here 2022. Thank you. Something we all hope to perpetuate in the future.
Privileged we all are to be ringside at this historic and inaugural episode. The Digital Conclave is a platform to harness the collective strategic intent so we can chart out an even brighter tomorrow for all the stakeholders involved. As I look around the hall, which I already did, I'm humbled by the degree of accomplishment and distinction. In attendance are CXOs, noted industry experts, decision makers, influencers, and of course, the entire top management of Bank of Baroda, along with the top digital force and evangelists of the bank. Between them are the who's who of banking, finance, and beyond. The agenda is to learn more about the evolution of the Indian digital ecosystem and the rapid transformation across industries and resultant changes in customer experience. Just a reminder that the thought leader sessions will be live streamed on YouTube. All right, so, and that means the camera is going to be across. So make sure you all are smiling, even behind those masks. Okay, so make sure you all are smiling. You never know when you're going to be captured on screen. Is that a deal? Yes? All right, super. Okay, so put on your cheeriest smiles. Make sure you do that because this is going to happen over the next 3 days of the conclave. Well, now what I would like you all to do is have a look at this screen here because we're going to be showing you a small AV that captures the essence of Bob World Digital Conclave 2022. Let's roll. Wow, so impressive. I love it. So we have a sequence of eminent speakers lined up for today's truncated agenda. They will enlighten us on areas that fall into their professional domain, which are relevant to the context of this conclave. But before we get there, it is only in the fitness of things that we define the texture of the conclave. We have just the dignitary to do full justice to the same. And so, the first item of business on the agenda, the welcome address by none other than the Chief Digital Officer at Bank of Baroda, Mr. Akhil Handa. It's my pleasure to introduce you to the accomplished business leader, digital strategist, digital business builder, and startup mentor. Yes, he answers to all these lofty titles and more. Responsible for the strategic digital direction of Bank of Baroda as a member of the corporate leadership team, he has played a pivotal role in digital transformation across the lines of businesses. Overseeing all things digital, his impact ripples across the length and breadth of the country that the bank has operations in. A widely recognized digital influencer, published author, and one of the top voices in fintech, he boasts several firsts. With such a glittering profile, he is often called to sit on various industry committees and governmental task forces. Wow. It is why the honor of delivering address of this unique conclave falls upon his able shoulders. So please give it up, everyone, to the digital officer, Chief Digital Officer, Bank of Baroda, Mr. Akhil Handa.
Okay, I'm here. Hello. Hello. Good afternoon, everyone. All right, so good. Well, thank you very much, Christine, for that very lengthy, undeserving welcome that you did for me. It's actually the welcome for all of you. And I think, while we have progressed a lot during the course of the last 2 years, this really is the commencement of celebration for the efforts that all of you have put in during the course of last 2 years and specifically the last year. I think the pandemic has been a catalyst for us in our digital journey. In terms of where we were, where we are, and where we want to be. Today, the bank dreams of nothing less than the pole position in whatever we do. And wherever we feel that we are humbled or likely to be humbled, we exit that. And I think this institutional confidence is possible only because of the collective efforts of all of you. And hence, I welcome you all to the first edition of the Digital Conclave. And of course, we do it in Goa, so welcome everyone. Soon we'll have the MD and the EDs join us as well. And before they come in, I just wanted to take this opportunity to do a few housekeeping announcements. The first is, we're not being prescriptive in this, right? These sessions have been designed to help you think about what is banking and beyond. What are the new things that are happening in the arena today as we speak, and what likely will happen over the course of next year, next 2 years, next 3 years. So this really is an opportunity for all of us to put our heads together and think about what the future will look like. And together, you are the best minds in the bank as we speak. And this is not me saying, this is your performance saying. You are the best performers of the bank when it comes to the digital business, and hence, this is an opportunity for the best minds to be put together and come up with a roadmap and vision for us over the next 3 years. Now, I have a small optical presentation that I just wanted to take everybody through, just to set the context of what is the big opportunity that we're looking at. So may we have the presentation, please? All right. Am I audible? Okay, great. So yes, so let's launch into the presentation now. So first, look, we are today in the middle of a revolution. This is the digital revolution that we're looking at. But we've been through multiple iterations of revolutions in the past. And at every point in time, we've seen an acceleration in the outcomes. You measure it by GDP, you measure it by the wealth, or you measure it by the level of connectedness. But at every interval, we've seen an acceleration happen. And what you see on the slide is the first 800 years took us to be brought to the steam engine. The next 100 years took us to the telephone. The next 100 took us to the mobile phone. And now, in 50 years, we are reaching a point where everybody across the globe is connected. And this really is very, very powerful, because not just individuals, we're also talking about machines being connected. So you have the IoT, you have various edge technologies in play. And this is really what is driving this hyper-connected, always-on economy that we are currently in the midst of. And this really gives us a great opportunity. This really gives us a great opportunity. And while we have a lot of progress that we've seen over the course of the last, I would say, 5 years in digital in India, but really the headline numbers do not cover the undercurrents. And on your left, you see 50% of the e-com deliveries in India today are still cash on delivery. And when you move to the Tier 3 and onward cities, that number is nearly 90%. So the opportunity for all the headline conflation that we see is still huge. More importantly, on your right, you have the India Internet funnel. where 136 crore individuals in the country, and nearly 14% of them in the metro tier 1, but only 15 crore online shoppers, and that too nearly half of them in metro. Which means the opportunity that we have that faces us is truly huge. We expect around 30 crore of these shoppers to come on stream over the next 3 years, and nearly 80% of them to come from Tier 2 and beyond, which fantastically overlaps with our own branch network. Hence, this opportunity is what Bank of Baroda is very, very well positioned to capitalize on. And pandemic has only accelerated this change that we're looking at. So there's a survey that was conducted by Google a few months back, which talks about and they asked people a question, if you are given an opportunity to use more digital or use more cash modes of payment, which one will you choose? Not surprisingly, 80% of the surveys responded saying, we will choose more digital. More importantly, there's one number that is actually missing in the presentation, which is how many people really got back saying, I will use more cash. Any guesses what that number was? 0. Nobody got back saying, I will use more cash. The direction of travel is very clear. It is a one-way travel. It's a one-way ticket that we have at this point in time. And on your right, you have the traction or the leading indicators of what the traction would be for digital lending business. And you see across asset classes, home loans, personal loans, MSME loans, nearly 60% of the initial product discovery is happening digitally, online. Think about it. When you want to buy a home loan, right, or you're looking for a car loan, personal loan, where do you start your journey? You don't go to 10 branches. You don't go to 10 different banks, right? You actually start your journeys on probably super aggregators online. And that is why that control of the funnel is becoming so important, to be able to engage digitally with our customers. That is the underlying proposition. If we want to win, we have to be there where the customers are starting their journeys. And you would have seen in Bob World, we have an e-com section. Because that gives us ability to look at consumer transactions, consumer behavior, consumer purchase patterns like the bank never saw before. Today, we can see who's doing transactions worth 50 rupees of a Jio recharge to purchasing, or doing a 5,000 rupee of Reliance BSES electricity bill payment. And the profile of these two customers is very, very different. And that has large ramifications for a bank of our size, because that helps us identify who the key customers are and what is the next best product that we can actually offer them that really suits their requirement. And hence, as we see these catalysts, there's only one theme, one word that I have for all of you today, which is accelerate. We're doing good, we need to accelerate. Let's not rest on our laurels. Let's not rest on the good work that has done. So the good work that has been done is well appreciated, well recognized, but let's make no mistake, let's be under no illusions. We absolutely need to accelerate. This is a winners take all industry. Digital business in winners take all. Remember this phrase. Look at what messenger do you use. I can conveniently assume that all of you use largely one messenger. Which is the social networking website you use? Probably one. All digital businesses, look at your e-com, right? Maybe one, at max 2. Digital businesses by design become winners take all. And hence, we need to move, and we need to move fast, if not faster. So let's accelerate. And just to look at history, where we were and where we are. December 2020, we have a quote from Kichi sir that was in the Economic Times talking about the launch of digital lending platforms, where he had set the vision for us for the coming years. And I'm very happy to report by April, in April, just a few, I think a week back, we had another article in the Economic Times that talked about our progress and that talks about how we are looking at nearly 50,000 crore of digital sourcing in FY23. And that, my friends, is an industry-changing number, because today, who is the one player that is the number one player when it comes to e-stamping and e-sign infrastructure in the country? Private banks, public banks. Any guesses? It is your bank. We are the number one player today. And we certainly intend to retain that position. And yes, there are a number of industry-first digital initiatives that have been taken over the past few years. You all know of them. I really should not get into any of them. I think you all are the prime movers of these products. You've actually helped achieve the illustrious numbers that we all are so proud of, be it the digital bank, be it the tablet bank, or be it, our pre-approved loans. The traction that we're seeing is just phenomenal. In pre-approved loans, in the retail segment, this year we've added number of account-wise, 50% new accounts compared to what we had at the beginning of the year. 50% of all retail accounts were added through this one channel. And that is exceptional, because that helps us give them a small ticket loan, see the credit behavior, and then grow the limit size. And yes, of course, the NIM is extremely good, so that also helps us. And going forward, we will continue this journey where we have many new initiatives in the pipeline. But before that, this is the digitization index progress that you all track very closely. Now, in 1 year, the index has nearly doubled. From when we started in April last year, we were at about 20. There's a scale of 100. And remember, I've always said, this index is not to pamper ourselves. This index reflects the true priorities that the bank has. We were at a 20 when we started. We finished the year on the same index at a 40. So again, I think congratulations to all of you, all the zonal leaders, the field leaders, who've driven this digitization index so passionately. And yes, the numbers you see on Bob World are there for you. One key number that I want to just help you relate to. We have a tremendous branch network, pan-India footprint. We are present in 18 zones, 159 regions. That's how we are organized. And there's a lot of footfall that we have in our branches daily. But did you know, today we get 3 times more customers every day on Bob World compared to our branch network. And that number has actually gone double over the last 2 years. Double. That's the pace with which we are moving. And I wouldn't be surprised if this number really goes to 5 times over the next year or 2 years. So the network strength is really moving digital. This is the number that speaks to the strength of digital distribution for all of you. And this number is something that we track very closely. The key initiatives for you. First is the digital banking unit. You know, the Reserve Bank of India has come out with guidelines, and we are of course starting out with a limited set of DBUs in a pilot phase. But the ambition is to really take the prime advantage of the DBU guidelines and become the #1 player in setting up DBUs. And during the course of this year, this is something that you will hear me talk about a lot more as we go forward. Because this again gives us a tremendous opportunity to expand our digital footprint at the same time rationalize our costs, or rather not have a sequential or a linear increase in costs. Bob World International, we've done a reasonably good job domestically, and I think it's about time to take this international. There are some key geographies, key territories that have shown a lot of interest. And today, as we speak, I'm talking to 3 key territories where I'm trying to figure out where exactly we need to, where we start off first with. And the kind of groundswell that we have, the kind of pull that we see today for Bob World to be brought to international territories, set up international remittances, do it for the NRIs, do it for the customers of the bank who've gone, expat customers, really is just phenomenal. And I think, it will take us this year to really strategize and bring this out. Third is the Bob World personas, and you will see a glimpse of it during the course of the next 2 days. We have an omnibus universal digital bank product that is Bob World, but now we really need to also start the key pillars. There are only 2 pillars that it rests on, and one of those pillars is a very robust loyalty program, and that is again something that we're going to roll out in this month. And you'll hear me talk about more in the coming days. And finally, we will reformat the merchant acquiring business. And this is something that we need to scale dramatically. So 3 key priorities in summary: Bob World and B3 digital account scale up. I think we've done an exceptional job on Bob World, but we need to continue it. We need to continue it with that much rigor and also give wings to the B3 digital account. I think this is something that is now ready to be taken to the customers at scale. I mean, customers can sit at their home and open an account, full KYC'd account with us, right? And enjoy great benefits, use an Amazon Prime and a Netflix subscription, a Times Prime, right? And this is a fantastic product for customers to engage with us. And in the pilot phase, what we've seen is 90% of the customers that have opened the B3 digital account are actually, very unsurprisingly, less than 30 years of age. So this has become, or rather will become, one of the most powerful channels for us to engage the digital natives, the young population of India. And finally, digital personal loans. You all have done exceptionally well. And I think given the progress that we've made, especially in the last quarter, the ambition is very high. We would like to do a lot more during this year, and we will keep on adding more products to that suite as well. Lastly, we take this opportunity to rebrand all our digital properties under the Bob World umbrella. So you have Bob World as the digital bank, but now you will see Bob World as the umbrella product for all our digital products. So can we have the AV? Great. So that, ladies and gentlemen, is Bob World as the digital sub-brand for us. And we absolutely have to amplify this during the course of the year. We have a great speakers lined up. over the next 3 days. I believe some of these will be agenda setting for us. So do soak in the discussions as much as you can. We will have towards the end an open house. And I would invite a lot of interaction, participation, suggestions from them. I know our top management is eagerly waiting for that open house session. Sorry. In closing, let me bring out Kabir Das Doha. जिन खोजा तिन पाया गहरे पानी बैठ जिन खोजा तिन पाया गहरे पानी बैठ मैं बपुरा भूडंदरा रहे किनारे बैठ. Those who have the ability to risk going far are the ones that will go far. With that, ladies and gentlemen, welcome you all again to Goa, the Bob World Digital Conclave 2022. Have a great time ahead. Thank you very much.
Thank you so much, Mr. Handa, for that super impressive presentation. Wasn't it awesome? Yes? Well, acceleration and winners take it all. I was learning too. Okay, so everyone, it's now time for a short coffee break. You can thank me later. Okay, so that's a 15-minute coffee break we're going to give you. It's a very short coffee break. Before that, I'd just like to inform some of you that you all given goodie bags. Yes, how many got goodie bags? Everyone? Yes? Be happy, come on, yes, you got goodie bags. So did I. Okay, so with your goodie bags, you were given t-shirts, right? So we would like to request you to wear your t-shirts on day 3 only. I know they're amazing. I know we all want to wear them as soon as we can, but keep it for day 3 because that's when we're going to have a special photo op with everyone. Okay, so that's one. And the other thing is, I would like you all to be present here as much as possible because throughout the next 3 days, what we're going to be doing is we're going to be asking random quiz questions across. Okay, it could be at any point of time, and the ones who guess correctly will be given a gift card from us. Okay, so make sure you're here. There's so much to look forward to. And on that note, you can take your coffee break. Also to just let you know, on the left of my left, we have a photo booth. So you can get your pictures clicked and make sure when you do put it on social media, you can hashtag Bob World Digital Conclave. I don't need to spell that for you. It's Bob World Digital Conclave. And you can put it on the bank's official social media handles, and I'm sure you all know which ones those are. Okay, so enjoy your coffee break. See you in 15 minutes. Happy networking and happy relaxing until you get back. Okay, see you soon. can settle in. Our coffee break is over. So we would love to have you back here. Get all your friends. If you have any friends missing at your table, please call them up and tell them we're about to begin. So please settle in. So thank you everyone for taking your seat. Thank you gentlemen and the lovely ladies. Thank you for being here. Thank you for returning. I hope you all are rejuvenated and refreshed, and I hope you all took the opportunity to network as well. Okay, so I would like to resume. So ladies and gentlemen, this is a good time as any to bring you up to speed about what happens in between sessions. Each session is going to be for 35 minutes, after which there will be a 15-minute Q&A session, right? So you are most welcome to ask questions. We will have someone with a mic come up to where you are, and I shall moderate the Q&A. But ideally, the sessions are 35 minutes and followed by a 15-minute Q&A. Right? Now, thank you. Where one session flows immediately into the next, we will be as we are today, right? So however, starting tomorrow, there may be parallel sessions running at the Bethel Hall, and we request all participants to attend sessions as per their interest and subject domain. So you will be informed about which sessions are running parallelly at the Bethel Hall, so you'll have to cross across the road, and you'll be able to attend those sessions. Okay, so most of the activity through the 3 days of the conclave will materialize right here at the Grand Ballroom. This includes the MD inaugural speech, product launches, award ceremonies, breakout sessions, open house interactions, and the much awaited gala dinner. Yes, happy, excited about that? Okay, so I heard a lot of people talking about the gala dinner, so I know the excitement and the buzz is around. Okay, so are we all set? Everybody settled in? Yes? Had a good break? Who said yes? I have to be so happy. Thank you for saying yes. Is he the only one who is happy? Where's everybody? Are you all happy after your break? Yes. Okay, super duper. All right, so we're now into our speaker sessions. Allow me to introduce the first of our distinguished specialists. Academically, Mr. Bipin Preet Singh is an electrical engineer from IIT Delhi. The born entrepreneur has brilliantly lit up the mobile payment space, then gone to electrify credit underwriting and insurance cross-sell. It was a dream to make financial services affordable to millions of Indians that drove him to founder MobiKwik. But even in his later ventures, he has developed distribution muscle that's 100 million customers strong. He enjoys building new products, which makes him just the entrepreneur to take us down the road ahead for Super App. Now, that's the title of our upcoming session with Mr. Bipin Preet Singh, founder and CEO MobiKwik. Now, since we're at the Digital Conclave, let's have a digital presentation with Mr. Singh via a live video conference, because he was unable to attend the conference here today due to being under the weather, but we're going to have him on the screen and have him talk to you over the digital space. All right, so we'd like to introduce and welcome him. So can we have him live? Like I mentioned, it's going to be a 35-minute session, after which any questions you have, he will be able to respond to you all. Of course, I will moderate that as well. So, 35 minutes. 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 35 min We shall wait for him to come on screen. In the meantime, let me tell you one more joke. Can I share a joke if you don't mind? Yes? Okay, so it's a very silly one, but please laugh, okay? So, so the thing is, there's this person who is a banker, and he actually asked the people in the bank, he says, anybody lost a note, like a bunch of notes with a red rubber band over here? And actually, like 10, 15 people said, me, 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 me. And that banker said, oh, great, here's a red rubber band. Okay, so, okay, I find a lot of jokes funny, but you're most welcome to laugh, okay? So that was something I came across and I said, that's interesting. So now that gives you more reasons to go digital, right? We don't want to be losing money and finding red rubber bands in return. Oh, fantastic. Everybody, let's welcome Mr. Bipinpreet Singh.
Hello, good afternoon, everybody. This is Bipinpreet Singh. I'm the co-founder and CEO of MobiQuick. I actually intended to come in person, but I had about a while, so I couldn't come. But great to be in front of the senior management at Bank of Baroda, and I'm really glad to be here today. Let me give you some background about myself and also about MobiQuick, and then I can jump in and talk about the topic that has been assigned, which is the road ahead for super apps. So let me introduce myself first. So, I am Bipinpreet Singh. I'm co-founder and CEO of One MobiQuick Systems Limited. I started MobiQuick about 12 years ago with Upasana Taku, who's my co-founder at MobiQuick. Before that, I worked as an engineer, so I had no background in business. I actually passed out of IIT Delhi in 2002 and studied electrical engineering and actually worked in chip design in electronics field at Bangalore, starting my career at Intel and then worked at NVIDIA and then Freescale Semiconductors, and then started in something altogether different, which was not related to hardware or chips, which was software. I'm an engineer at heart. Coding was my passion. So even though I didn't know anything about software programming, I actually started writing the code for MobiQuick that you use today, that millions of people use today. I wrote most of the code myself when we started it, more than 10 years ago. Since then, we've come a long way, and we've built a company. We built sort of a fintech app which combines functionalities of payments using wallet, UPI, as well as buy now, pay later, credit, different kind of credit products, insurance products, as well as we are building a wealth management functionality on the app, including mutual funds, digital gold, etc. We have more than 120 million users on the MobiQuick app, and more than 3.5 million merchants supported. So coming to the topic for today, which is about super apps. Super apps are essentially apps which have been talked about quite a bit in the last few years. People have talked about super apps as the future. So let me just take a minute first to explain what a super app, at least as per my definition, is. A super app is actually an app which combines many different kind of functionalities which could be related or unrelated, and create kind of a one-stop shop for a lot of different services. Its most logical equivalent in the physical world is a supermarket. So if you go to a supermarket, you can buy anything. You can buy household stuff. You can buy food items. You can buy grocery items. You can even buy toys. You can even buy electronics. So you must have visited, and it's actually a concept which emerged mostly in the Western world, in US and other countries, where they have these large format retail, which came to India, and you had the types of Big Bazaar or Reliance Retail and other kind of formats which had the same functionality. In the physical world, it costs a lot of money to for that real estate and put so much functionality together or so many services together in one place. Thankfully, in the world of technology on the phone, now technology has advanced so much that you don't need you can do this on just on a smartphone, because there is enough physical capacity on a phone that you can have an app which can order you a cab. It can also order food, it can order grocery. Maybe there's an app which can book movie tickets, and it can also book for events, etc. Super apps actually interestingly emerged first in China in a big way, with apps especially like WeChat. WeChat started in China as a messenger app, which was meant for P2P messaging, which means people talk to each other using a messenger. This was actually at the starting of internet in China, when there wasn't any other kind of easy way to communicate with each other. But on the internet, this WeChat became the first app which hundreds of millions of people, and now more than 1 billion people in China use. Because so many people were using it and on a regular basis, so they started introducing different kind of functionalities within the app through the concept of mini programs. For example, you could build an app within the app which would order a cab. And the most popular cab service in China being the Didi equivalent to Ola or Uber, or the combination of that in China. So somebody created a program, Didi created a program which using which you could order a cab within WeChat. Similarly, for food delivery, there's Meituan. For e-commerce, there are tie-ups with JD.com, so many other kind of e-commerce places. Even ticketing, you could book your travel tickets, you could book your movie tickets within the same app. So this has been super successful and created a lot of revenue, a lot of transactions for WeChat app, and that's why it caught the world by a storm, and a lot of people were interested in exploring whether super apps are possible in their particular countries or geographies or domains. Now, a lot of time has passed in the last few years, and I think a specific question is more related to India, whether super apps are likely to work in India, right? Now in India, there is also apps which support a lot of functionality, different kind of services. I would say some of the more popular super apps in India would be something like Amazon, where you can do a lot of things like order products, services, even payments, etc. So Amazon is I would say is the closest kind of equivalent of a super app. Recently, we obviously heard about Tata launching this Tata New app, which is again combining a lot of different companies which part of the Tata group and offer different kind of products like e-commerce and fashion and different and even healthcare within the same app. Now there is obviously merit in combining many different services, but there's also a lot of cons as well. I think the most important thing is that whether it does create any kind of a cognitive dissonance for the user. So what that means is that as a consumer, if you look at the way brands are built, the brands are always built by narrowing the focus, right? That's why you have different kind of segments of soaps, or different segments of shampoos, or different segments of food products, premium, mid-tier, low-tier, etc. Now in the super app world, we are talking about not just combining different segments, but also combining different functionalities. So it's a big challenge to actually explain to the masses and to the users that this one app will do all of these things together and do it in a way which is trustworthy, which will be the best user experience, uh, and will be, will also be cost effective. So, at least I have my personal reservations that when you combine unrelated verticals, then it is going to be difficult. I think things like e-commerce or retail, combining different segments still makes sense. But to combine retail with healthcare, with ticketing, with payments, I think it becomes quite a bit of challenge, because for the consumer, the discovery of these different functions or services within a super app itself becomes a difficult channel. And as you know, the real estate on the screen is still limited. So you have to create multiple different mechanisms of browsing or discovery within the app, right? We are all used to, for example, let's say an Instagram or a YouTube, where you just swipe up and keep watching a lot of different videos. Somebody will have to create a super app which can utilize a lot of that AI to keep coming up with what you may want to do on a super app. But I think it's easier said than done. I don't think anybody has cracked it. And the second, I think, point is that the most successful super apps, let's say WeChat, for example, in China, was successful because it had one particular use case, which had hundreds of millions of DAUs, which means daily active users. So people were using it primarily for messaging, and so many people were using it on a daily basis, which allowed other products or services to be offered. And so even with a 1%, 2% conversion, you would create a very large business, or you would create a large amount of engagement for people to buy tickets or cabs or grocery, etc. In India, I think the evolution has been more similar to as in US or in the Western countries. In Western countries, typically such a super app doesn't exist, which combines unrelated functionalities. So you have like an equivalent of a Book My Show, like a Ticketmaster for booking movie tickets, or you have an Expedia for booking travel tickets. You have an Amazon, and then Amazon, there is different competitors to Amazon as well. And then you have within e-commerce, there is different kind of vertical e-commerce products. Some people just sell fashion products, some people just sell healthcare, etc. So in fact, the very opposite of super app, which is more segmentation and more verticalization, has been working actually in US. But for the audience here, I think one of the interesting things to learn about or to explore just is more in the world of fintech. Now in fintech also, or financial services, this concept of super app is being talked about a lot, and a lot of startups, including ourselves, we are trying to build different versions of a fintech super app, right? And there, I think there is still some merit, because a fintech super app could offer payments to start with, right? You want to do payments fast and convenient, etc. And then maybe you need some financial products. You need a loan, or you need a buy now pay later product, or you need a credit card. At the same time, you have excess money, so you want to invest to get the best possible returns on your app or on your money. And all these functionalities could be combined and offered in the context of a fintech super app. But still, so far, I think if we see the industry, this has not happened very highly transactional. You take MobiKwik, or you take a Paytm or a PhonePe or Google Pay. These are meant for transactions. You do fast transactions, you get in, you scan a QR code, or you want to transfer money to somebody, you're done. Or maybe you need buy now pay later product, you can use that. And let's say you want to apply for a personal loan, you just get in, submit all your documents digitally, and you get the money, and then you get out. Nobody's staying in that app or browsing that app or trying to discover what else is there. It's a very need-based functionality. So that way, these apps are like ours are very transactional. And then, there are other kinds of apps that some people are trying to build, which are more engagement driven, where, you get to know what's happening with your money, where are your investments, stock investments, mutual funds, knowledge about the markets, etc., or how to get the best credit card, etc. And that's a lot more content driven, a lot more content driven or data driven, apps. These apps are still work in progress. Most of them haven't become very successful or haven't got a lot of, traction yet in terms of number of subscribers. I think the key challenge for a fintech super app would be similar to, what a bank branch does, right? You go to a bank branch to, for example, I used to go long time back, 25 years ago, to update the passbook. And then you sit there, you go with your father and the bank manager, you start talking to them. They say, "Aur kya chal raha hai? What is going on? What is the new product? Or there is a new home loan product, or you buy this insurance, or, there is a new credit card which is available, which will really be useful to you." That kind of selling or that kind of discovery of new functionalities and engagement with, different kind of financial products, it's still, work in progress. There is no app has managed to combine both the ends, at least in my view. And that's quite actually a very interesting challenge, because, money, as you know, is something that we all care about. And ultimately in fintech, it's all about money, right? And money is an emotional subject for all of us. Whether we like it or not, we all care a lot about money. It lets us dream. Money is often the constraint on our dreams. It impacts our relationships with other people, whether it is friends, family, or just, we want to use money to convey what our status is in the society. So, I mean, there are people who care about, so much is happening in the stock market, stocks are down, etc. Even though, most of them don't have any investments where they're either losing money or gaining money. So in that sense, I think a financial super app or a fintech super app will, in my view, combine the power of smooth and reliable functional tasks like payments, loans, etc., with a very strong AI-driven, data-driven engagement framework, which creates interest, which creates excitement for different segment of consumers. And it can't be the same kind of engagement for everybody, because somebody who's living in a metro may not care about the same things, doesn't have the same level of income, doesn't even, understands English. Is very different from somebody who's sitting in a tier 4 town and working on, let's say, a different kind of language. Needs are very, very different. Incomes are very, very different. The products that they need are very, very different. But the good thing is that with the app, you can actually, you have access to so much data that you can actually contextualize and personalize the experience. So while it may still be a financial or fintech super app, it can actually appear almost like a made to order or a custom made kind of an app for a person who's using it. But this requires, I think, the kind of AI or data segmentation and personalization that it needs. It's still, in my view, it's some distance away, but it's definitely doable in the next few years. And I think whether it is a bank or fintechs, they all have the opportunity to actually use this data and the advancements of AI to create this kind of a personalized and contextualized experience, which can then result in a fintech super app. So from my side, I think that's what I wanted to talk about, and I would definitely love to answer. Thank you.
Thank you so much, sir. Is he going to be accessible to us? Because we still have a Q&A that in case anybody would like to ask him. Oh, he's still here. Thank you so much. Can you see me, sir?
Yes, yes, of
Oh,
course.
great. Super duper. So thank you so much for that lovely insight that you just gave us. It was really enlightening. And, you know, we are so addicted to WhatsApp, and I really hope that it becomes a super app too, or on second thoughts, we get an Indian super app that bowls us over. So I think that would be fantastic, right? Okay, so anybody would like to ask a question, then we can have the mic come to you, and he would be happy to answer. Yes, I see a hand over there. Just
good evening.
if somebody can go to him, please.
Yeah, good evening. Am I audible?
Can you please stand up because we can't really see you. Stand up. Oh, here you are. Introduce yourself,
Yeah,
please.
Parmeshwaran here from the Detail Group of Bank of Baroda Corporate Office. While the number of apps that are coming in are a welcome trend for the economy as a whole, one concern that arises is the digital frauds that are taking place, and also the data privacy issues that come along with it. How do we address this? Because as you open the newspaper day in and day out, you see that a lot of digital frauds take place. Common man is subject to loss of funds. This is a very growing concern. And how do you think this can be addressed?
Yeah, no, very, very valid question. Thank you for asking that. So I think there are two aspects to it. One aspect to, I think, the data security and data privacy part is definitely about the organizations, whether it is banks or fintech companies, strengthening their systems, their processes of handling of fraud, and basically covering all different aspects using which fraud can happen, and ensuring that those are minimized, and also incorporating them and reporting them, which they're anyway required to do to the regulator, to the Reserve Bank. And I think there is, as technology is developing, there is more and more opportunities for a lot of scamsters to take advantage of various loopholes. And many of these loopholes are in the technology, but many of these loopholes are just in the processes also, in the way these apps work, or because in digital domain, you're not dealing with a person, you're dealing with somebody who's remote, who can manipulate the app and or get other people to share their identity and manipulate the app. So I think there is a lot of work that needs to be done from the organizations and work together with the regulator and come up with the common standards for data security and privacy, some of which is already in work, but I believe that more of it is going to come in the form of either guidelines or a law very soon. I think the second part to it is clearly that as a country, right, we are at a stage where digital is growing much faster than, digital literacy is growing much faster than financial literacy. And what that means is that a lot of the common people that you're talking about, they have a smartphone, they download an app, they are connecting their bank account using UPI or a wallet or a card or something like that, but they lack fundamental literacy about how money works, how these transfers work, or how to handle different aspects. Like simple example like UPI fraud, that you're not supposed to share your OTP, whether it is in the case of UPI or in the case of even cards. And I have received complaints where somebody working in bank actually ended up sharing their OTP, because many of these scamsters are very well trained. They actually are able to get the information out of you. So I think the sharing of data there becomes very important, but also digital, in my view, digital financial literacy is still needs to go much broader and much more deeper in order to handle these cases of frauds and save people from losing their money.
Okay, thank you so much. We can have one more question. There was a gentleman over there. Yeah, thank you.
Hi, Vipin. Thanks for such a wonderful speech and the presentation about the new app, Super App. Bipin, I mean, just pardon me for being so direct because not every day we are meeting a co-founder of Unicorn. So MobiKwik being a unicorn startup, I just have two questions. The first one
I'm
is...
so sorry. Sir, if you could stand up so we can also get you on camera. Yeah, thank you.
Thank you. Bipin, I mean, being a unicorn, I just want to have two questions. The first one is like, being a banking partner, like what exactly a unicorn, looks for in a banker? Like apart from the general scheme of things, like what exactly would be the factor which unicorn is looking up with a banking partner? That's the first one. And the second one is like, I mean, I don't want to be neither a pessimist or optimist, but I just curious enough to know, like, in the future ahead, being fintechs and versus the PSBs or banking as a whole sector, like whom do you think like has edge to capture the the bigger market, because India is being the biggest, I mean the fastest growing ecosystem in the world. So whom do you think like has the edge over the the other? That's the two questions from my side. Thank you.
Okay, thank you. Thanks for asking. It's a very tough question. The first part is easy. Actually, the first part is that when we work with almost all the banks in the ecosystem, and banks these days are far more advanced than they used to be a few years ago. Not just in terms of technology or awareness about digital, but also in the complete mindset of how to operate in this age of apps. And from that point of view, I think just this mindset of the bankers, of the bank people who work and interface, not just internally, but also with the external world, is what matters. That willingness and openness to engage. The fact that I am today here in the Bank of Baroda Digital Conclave and talking about MobiKwik and FinTech and super apps itself shows that kind of openness and willingness on the part of banks to actually explore what the world is out there and work with them. And that's the spirit, in my view, where the second answer is also happening, which is that I think the financial ecosystem is one ecosystem where I don't think that there are only few winners and less of them are losers. It is talked about in the internet that there is some network effects and that only some companies will stay and some companies not stay. But I think in the world of financials, there is clear opportunity for collaboration between banks, being private, whether it is private banks or whether it is public sector banks, whether it is the fintechs. And there are hundreds of fintechs, if not thousands, already in India. There is already, I think, close to 100 banks. There is large number of large private sector banks like State Bank of India, Bank of Baroda, PNB, etc. There is private sector banks, there is small private sector banks, there is small finance banks. So I think that each one of them, they have the opportunity to collaborate and build with each other the right solutions for the end customers, whether it is retail customers and or corporate customers or business customers. Because many times the banks have the strength of balance sheet, the advantage of regulations, many things that they can't do, which the fintechs can't do. And fintechs have many times the advantage of moving faster. They're built by engineers like us, so we think tech first. So the collaboration creates many different opportunities where you can build the right product. NPCI is one example, which is where they've connected so many banks as well as fintechs together to build this great ecosystem of UPI, which is probably one of its kind or the only kind in the world. So in my view, this collaboration is the future. It's the only way India will move forward.
All right. Thank you so much. We're not going to have any more questions now as we need to proceed. So thank you so much, sir. I really appreciate you being here with us like this. And namaste to you too. Thank you so much. So before we proceed, I would like all of us to just stand up and give a warm welcome to Mr. Sanjeev Chadda, who has just joined us, MD and CEO of Bank of Baroda. A warm welcome from all of us and from Goa, sir. Good to have you here. All right, so thank you, everyone. From the road ahead for Super App to improving customer experience in digital lending, the sublime level of discourse remains the same. The subject and perspective shifts. Our next speaker provides leadership and oversight for both the Credit Bureau in India and analytics businesses in India and Middle East region for Equifax. It was he who set up the India business of global tech company Pitney Bowes as its first managing director and successfully helmed the business for 10 long years. Director at the Singapore-based IHPL, member CII's National Committee on Inclusion and Digitalization, his is a much sought after name because of a proven track record of building high-performance organizations, setting up processes, implementing controls, and introducing innovative solutions. All of which he does to the effect as MD and CEO of Equifax India. An avid cyclist with an inclination for farming. I love that. This is so cool. Get ready to extract huge mileage and harvest pearls of wisdom as Mr. K.M. Nania takes the podium. So can we have him on stage, please? Sorry, sir, am I saying your name right? It's Nanaya? I think please correct me. I hope I'm saying your name right. Nanaya, my apologies. So Mr. Nanaya, welcome, sir. Good to have you.
Bear with me for a few minutes till I get all this right. Right, this is, which one moves up? Should I point this side? Thank you, and good afternoon and good evening. Thank you for having me here for your first digital conference, and thank you to Mr. Sanjeev Chadha for inviting me. Thank you, Akhil, for inviting me for this event. I came in when Akhil was presenting the mid portion of the Bob World, and we are fortunate enough to be part of the Bob World app. I'm sure all of you saw a small icon which called Credit Score. So the credit score, when you click on it, it gives you an Equifax credit report and the score. I think it was innovative work that we did with Akhil's team in terms of how can you search a credit report just based on name and phone number. So a lot of work that happens based on data and analytics to power the journey of apps in the country. I have not a brief presentation. I've been told 35 minutes is the time. I'll try and see if I can keep up to 35 minutes. You know, being a data company and analytics company, we have a lot of data and a lot of views on the market and a lot of very valuable inputs as Bank of Baroda tries to build this super app, right? So I have a couple of sections to the presentation. I'll give you all a little bit of a bureau at glance, so how does bureaus operate in terms of the data and analytics that we have. So that'll give you a perspective of how you could leverage the bureau data very effectively as you start the journey of building and accelerating the apps. The second part is, no bureau presentation is complete unless we give you an industry view, which is absolutely data-based view of what data speaks. So we'll give you a little bit of a snapshot of industry view. It could be utilized when you build a product or when you launch a product, when you look at the geography for expansion or geography to control, or when you want to spend your marketing dollars. So a lot of insights. It's all the way you want to use the data. Data speaks for itself. It's all about how do you consume data for effective decision making. So that's the second part of it. Third part of it is it's an inquiry trends. So when I say inquiries, as somebody applies for a loan on an app, after the KYC, it hits the bureau. So that's called the inquiry. So very interesting trend on the inquiry analysis. Maybe somebody who is spending the marketing dollars here would like to see the data in a lot more depth as to what does inquiry trends show from an app usage perspective. I have, we have a full length of digital solution which enables the app to be very, very seamless to the topic that we talked about. How do you improve the customer experience on a super app or an app? More from a credit perspective, that's where our expertise lies. So all that I'll talk largely on technology is all related to credit and a bit of a conclusion. Very quickly, the 4 blocks that you see are the 4 data cylinders that we have. That's the way we organize. The reason why we organize the way we organize is because the product characteristics are very, very different. The microfinance, which you see onto your right or to my left, so that's the bottom of the pyramid lending. So that's what we organize. From an informal credit to a formal credit, microfinance self-help group is a stepping stone, and that's organized in the microfinance bureau. Retail is all of us, you and I borrowing for buying a house, car, or a PL. It's all organized in retail. And then your commercial, which is all entities which are borrowing. And I think there was a question about the fraud risk on digital lending. So we've just launched the fraud risk exchange, which is called Luminate, for the fintechs in the country. There are 7 fintechs who have signed up, 4 have gone live. I'll talk a little bit more as to what this fintech exchange is all about. What does it bring in terms of value to the digital lending landscape? This is truly for unsecured, high velocity, low ticket lending. That's exactly where the risks are very, very high. So how do you control the risk in that space? So that's broadly the four buckets or 4 exchanges that we have. About 6,200 members contribute data to this exchange. So this happens daily, weekly, monthly. So that's how up to date. If you combine all the data together, we have about 2 billion trade line information that we manage in the country. So across all asset classes, from bottom of the pyramid lending to the top of the pyramid lending, all asset classes, 2 billion is the trade line information as of March, as of February that we have. And what we do with the data is to bring in a lot more insights, which helps the banks and the lending institutions in the country make more informed decisions. Our outputs are utilized for making credit underwriting decisions. Outputs are used for market entry decisions, product launch decisions. So the data is phenomenal in terms of what it can bring out. And what we've done recently is, what happens is, let me step back here. What happens is when you inquire a bureau for a consumer requirement for a 2-wheeler loan, it actually pings only the retail. So what we now do is, if you ping for retail, we look at all the 3 exchanges and give you an output back, because there could be a presence in all exchanges, which is called a comprehensive credit view of the borrower or 360-degree view of the borrower. Now, our central bank regulator is also very, very keen to ensure that all the lenders in the country look at the comprehensive view, not a particular view of the borrower. So there is a requirement of looking at a comprehensive view. So being where we are, I think it makes it easy for us to bring in that comprehensive view of the credit history of the borrower. So lot more that we could do possibly when we have a little bit more time, and I can really talk a lot more about what bureaus can do and what data can do. But I'll quickly jump into a little bit of industry insights given the time constraint that we have. So this is purely on digital lending. Just a caveat here. When I say digital lending, a lot of banks do a lot of digital lending, but doesn't get reported as digital lending. It gets reported under different product buckets. For the perspective of understanding how the characteristics of digital lending or app-based lending works, we've only looked at the data of all those fintechs who pure play app companies, who disburse loans based on apps. So we've looked at only that data. So it'll give you a very clear perspective of how true digital lending travels the journey. So this is, onto your left, the industry numbers. It's about 1,52,000 crores is the disbursement that happened in the October, November, December of 2021. Obviously, PSU banks have the largest share on the PL, which is about 42%. There was a little bit of a decline of the disbursement, about 13% as compared to OND 2020 to OND 2021. So there is a 13% decline. But what's important from the context of this conclave is that just see the number on fintech. While industry has kind of declined over the quarter over quarter, the fintechs have grown 51%. Fintech's phenomenal growth that's how the country is embracing the digital journey and how everybody is looking at the digital journey to apply for a loan. And so on the right is what you see is just the pure play fintech disbursements that you see is consistently growing. And the bottom one is the ticket size. I think there is a little bit of a ticket size increase in the January, February, March of 21, but otherwise I think it is fairly consistent. I think it should be 2020 at about 8,000. So that's on the disbursement. This is on the POS, right? You know, a portfolio outstanding, if you see again, I think I'll not talk much about it, but I think industry is consistently growing. There is a 20% growth that is seen in the industry from a portfolio outstanding standpoint. Fintechs are grown only 3%. Now, if you look at this slide with the previous slide, fintechs disbursements grew by 51%, and here the POS has grown only 3%. What does it mean? It means low ticket, short tenor loans. You know, they're turning very, very quick. So that is why the POS is not growing, but the disbursement is growing. From an earning potential point of view, that's a great earning potential because it's short tenure, quicker, and you collect and then you disburse again. So I think what's important to note, you know, if you see the performance levels, public sector banks have a phenomenal performance on the PL. 90 plus par levels on public sector is 0.37, much lower than industry. Industry delinquency on par 90 is 0.84, whereas public sector is 0.37. Congratulations to all of you for a phenomenal work that you're doing to ensure a very responsible lending happens in the country. And the 90 plus of the fintechs are a little higher, which is at 6.2%. So I've got consumer durable, I have a business loan, because these are three broad products which are, you know, largely seeing the flavor in the fintech landscape, in the digital lending landscape. Consumer durable, again, you know, largely, you know, the exposure is with NBFCs. They are the largest players on the consumer durable side. Fintechs have taken interest of it, but, you know, there is a little bit of a flat performance that we see on the fintechs. And, you know, and industry has grown phenomenally well in CD again. You know, 37% growth is industry growth on consumer durable. Largest players, as I said, is NBFCs and the banks. And the ticket size typically you see is, you know, buying a fridge or a telephone or a refrigerator. That's about 15,000, 28,000 was, I think, the peak January, February, March, and then moves on to 15,000. So again, portfolio-wise, I think the fintechs are still stable, so which indicates that, you know, there are two things, right? When, you know, the market is not picking up for fintechs, it could be an opportunity for a large bank like BOB to play in this space. So that could be an opportunity as well. For all reasons, fintechs have not been playing well, but I think what's important to note again is the public sector bank's performance, though the portfolio size is comparatively smaller as compared to the NBFCs, again, performance is really good on the portfolio side of us. Business loan is a new area, which is I'm running a little fast because of the time schedule. So, you know, if you have questions, you can ask me questions. Business loan is the fastest growing at this point in time from a fintech perspective. A lot of interest. If you see the growth that fintechs are disbursing from OND 20 to OND 2021, may not be a big number, but there is a lot of interest, a lot of growth. The POS has actually contracted, you know, the growth is contracted by about 4%. In the last quarter, which is September to a December quarter, but year on year, I think they've grown 42%. Though it's a very small base, but we are seeing a lot of activity on the business loan side of it. You can see the average ticket size, I think, ranging anywhere about 6.2 lakhs. It's a little bit of a dip down when I think COVID hit the country. I think there was a little bit of a dip in the ticket size, and the pickup of the ticket size also indicates this business sentiments. I think the confidence level is coming back. That's where the ticket size is also increasing on the disbursements. And this is on the business loan again. Fintechs again grew the POS by about 28%, phenomenal growth. And what's important to note here is, you know, as compared to PL, where fintechs 90 plus was about 6.2%. Here the performance is fairly good. The fintech delinquency is about 90 plus is 3.8, whereas PSU is about 4%, and the industry is also in the very similar range. So fintechs have focused on the business loan segment. There's a lot of demand coming up for the business loans. I think that's where the focus is. So that's a little bit of the three products. I'll just give a geography flavor of how the geography is looking at. So South has grown the largest. This is again fintech lending only, not to be mistaken for any other lending. Just on the fintech lending, the South has grown the fastest, growing the fastest. If you see the POS levels, also South and West are the highest on POS. Performance is fairly stable, except for, I think there is an aberration in West. for consumer loan. Otherwise, I think, if you look at South, which has been the fastest growing, followed by West. Again, to the point that I earlier made, as you decide of the geographies to focus on, geographies to spend the marketing dollars on, I think all this data would become extremely, extremely useful as to where should you focus on from a marketing spend standpoint or a product standpoint and a product design standpoint. So this is very interesting inquiry trends. Again, I'll fly through the slides. So, contrary to the conventional belief that digital works only in urban, the growth that you're seeing in rural, these are rural inquiries, not necessarily approvals. So the rural inquiries have grown 300%. This is, we can't disclose the inquiry number per se, so we have taken 2020 as 100. If you compare 2020 as 100, 2021 December was 350 in rural, followed by semi-urban and urban. Maybe urban had a large base, so that that reflects possibly the growth, but rural is catching up on digital. I think the connectivity of internet, I think, making a phenomenal difference from a rural adoption of digital technology perspective. And remember, all this for applying for a loan. Conventionally, when I was small in Coog, we never applied anything on digital. We always went to the bank manager and spoke to him for a loan if you have to do. But rural is now picking up on the digital. And these are the states where the growth rate is seen. Again, all the southern states, Andhra Pradesh, Telangana, Karnataka, Tamil Nadu, followed by Rajasthan, where we're seeing a significant phenomenal inquiry growth that is coming up. So again, very valuable inputs as you make your business decisions. And this is a little bit of a different cut. So which product is seeing a lot of interest or growth? You see consumer product, consumer loans, followed by personal loans are the two important product segments which are seeing a phenomenal increase in the inquiry volumes. And most importantly, look at on the right side, which is the age group, who is applying for loan on a digital platform. So again, whatever that you do can be designed extremely well. 18 to 21 years, there's a phenomenal over 500% growth in inquiries. Not necessarily all this 500% turned into an approval, because it could be no hit in a bureau. When I say no hit in a bureau, they don't have a footprint in the credit bureau, so it could be no hit. So there could be opportunity how to address some of the new to credit options, new to credit borrowers through alternate data. That's another big topic to talk about. So we could talk about it another time. But this is the age group distribution is where we see how digital adoption is happening and how everybody is applying or interacting on the digital medium with the banks and with the lending institutions in the country. So this is just an inquiry. When do people use their app to apply for a loan? So this is the question that I had for the team as to what time of the day everybody will look at an app to apply for a loan. Very consistent. We mapped Monday to Sunday. So Monday, Tuesday, Wednesday, Thursday, and Sunday. The peak is 7 a.m. to 8 a.m. So if you want to spend a marketing dollar, if you want to send an SMS, send somebody an SMS at 6:45 a.m. First recall, 20 minutes is normally the memory float, right? So in 20 minutes, somebody's going to get onto an app to apply for a loan. So that's how data can be leveraged very, very effectively to ensure that you effectively spend your money. So this is the scene on Monday to Thursday. See how beautiful the trend is. When it comes to Friday, we all talk about a weekend coming up. You see the weekend fever that sets in for Friday. So this is Friday. 7 to 8 moves to 8 to 9. There's a little bit of a drag into 8 to 9. So it moves into by another 1 hour that people decide take it lightly, take it cool. Maybe they go a little late to office, or maybe it's a relaxed day. They apply on 8 to 9. So that's where it peaks. But other thing to note is it's almost technically 24/7. Everybody's applying for it, except for the peak 3 a.m., 2 a.m. to 4 a.m. I think that's where the volumes are lower. And Saturday is, again, very different. It actually, the whole thing moves into mid-afternoon. That's when everybody applies for a loan. So this is how the trends are seen, and it's all how you want to use the data and how effectively you want to use the data. And these are, as I said, pure play fintechs wherein people apply for loan on the app and get the decision in seconds and a minute. And we respond back to any query from any app in sub-second, in about 700 milliseconds. We look through the 2 billion data size, pull up a report of Nanaya, and present it back for making a decision. So that's how we do it. That's how quickly we do the decisioning on this. So this is a bit of an inquiry trend. So I'll go quickly to the digital lending. I'm not going to take too much of time. It's platform, it's technology, and the theme is largely about how can you improve the experience of a consumer on your app, right? So I always say that if a customer comes on an app, if you ask one question, Nanaya, name, Nanaya is great. You ask him another, next question gives you the phone number, fantastic. You ask the third question to Nanaya, he starts to fade. So he'll start to fade. If you ask the fourth question, he switches off the app and he moves off. The reason why I say this is the dropout rates on app is anywhere between 50 to 55%. So somebody who comes on an app, continues the journey, is only about 40 to 45%. Now imagine the amount of money that everybody would have spent to draw traffic to your app and not being able to convert that into a business is a phenomenal loss of money spent to draw attention to the traffic, to the app. So what have we done as a bureau and a technology company? You know, we are a data, technology, and analytics company, so we are all three blended in very well. Globally, we are present in about 26 countries around the world, and in the Asia Pacific, we are present in India for the entire geography, and rest of the geography in Asia is covered through joint ventures. So we have a large data science organization based in Bangalore. The bureau is headquartered in Mumbai. So I'll run it very quickly. I'm not going to take much time. So this is typically the journey that happens, from start to finish till the money is credited into the account of the individual. So we have solution at every stage. I'm not going to talk much about any of this. I'll talk about a pre-fill. What you see here, is there a pointer here? Does it have a pointer? Which one should I use? Pointer? Oh, thank you. So pre-fill. I'll talk about pre-fill. I'll talk about Luminate. I spoke about Luminate. Then I'll go to income estimation, and I'll move on and fly out of this couple of slides very, very quickly. So I talked about improving the customer experience. How do you improve how did we solve for it? How did we solve as a bureau, right? First thing, if you look at pre-fill as a solution, so when a customer comes onto your app, he just puts a name and a phone number. What we do is we dive into the bureau, because bureau has all the verified data, which was largely submitted by the previous lender. So we fill in the entire app through the data. So the moment I put my name, Nanaya, and the phone number, the entire information is mapped. The experience is completely different. So it's a very simple solution, but you wouldn't believe the simple solution has solved for the dropout rates on the apps by about 20 to 30 basis points. So that's how improvement it is. So suddenly when I see an experience which is so good, the customer feels that, the company or the organization understands me. They've mapped it. They want to make my journey very easy. So we fill in all these details. The question that we ask at the end of it is it right? Do you want to modify, change and close? If not, move on to the next stage. Now again, it has to be a frictionless journey. You cannot be asking more questions. So remember the point that I talked about. Customer starts to fade if you ask more questions. I'm not sure, at least I start to fade if I ask too many questions are asked to me for any particular journey. So once you do the pre-fill, after the KYC and all of that, which is mandatory requirement, what comes is the fraud check, right? With the increased digital penetration, one needs to be very, very careful of the potential fraud risk as well. So we built this fraud exchange only for the digital journey at this point in time. It's going to expand into other areas. So what happens here in the fraud exchange are two things. At the moment, it is a known fraud data which is there. So as the inquiry comes, hits the exchange, we tag and send it back if it is any potential fraud risk. This is as submitted by the lending institutions at this point in time. But the second phase is the most interesting phase on the fraud side of it. The second phase of the launch, which is going to happen sometime in August or September of this year, is that real-time inquiries from all the apps floating through this exchange called Luminate, wherein, if there are syndicate frauds or bust-out frauds, if somebody is applying for a loan on 5 different apps on a simultaneous basis, we would be able to track that and say, at least not stop the first lender, but stop the second, third, and fourth lender to say that we see a pattern here. There is potentially a risk here in this application. So a lot more will play around. I'm not getting into the details and mechanics of it. I think the ML and the AI capabilities of this platform will come into play at that point in time to potentially identify fraud risks. The thing that we work on as a credit bureau are two things. We work on helping reduce credit risk. We help on reducing fraud risk around the world. So that's what we play in. And this is a step towards that. And more importantly, there was a gap in non-availability of technology platform for digital lending in this space. So once you do the pre-fill, if you remember the journey, do the pre-fill, do the fraud check before you start spending more money on it. When I say spending more money, you do a bureau check, all of that stuff, it costs money. So if there is a fraud, at the gate itself, you stop the particular, journey so that there's a cost savings as well as part of the journey that goes on. And I talked about a comprehensive view of the borrower. Again, this is a 360-degree view of the borrower. He must have borrowed in microfinance, retail, commercial. We bring it all together, present, the underwriter, I am sure Mr. Rajiv would be very, very happy to see a 360-degree view of the borrower when he makes the underwriting decisions, right? So that is very, very important. That's how the comprehensive view of the borrower is presented. Again, all these are happening in the back end. The customer is only still experiencing the app, and these are all happening in sub-seconds, right? And what we do is, now, for you all to make a decision, you need to know the income. Now, again, everybody is happy to give, Nana is happy to give his name and phone number, but not the income. Though all of that is available, we disclose everything, but there's always a second thought as to whether income, should I give, how much to give, all of that thought, that slows down the process. It's a friction, right? So we've built an imputed model which helps you estimate the income online. So you don't have to go back to verification of income, asking for an income. You could actually estimate an income very, very clearly on the fly through an imputed model. So this is income. Again, it's all happening at the background. You ping for an income. Now you need to know his obligations, how much of EMI that he or she is having at this point in time. How do you calculate the FOIR? So we give income, we give you the EMI estimation, which is again online. So you see the accuracy levels, we're about 88% accuracy. These are not reported EMI, these are estimated EMI. So this is part of data, this is part of analytics, this is part of technology that we use. We're able to predict the EMIs also very, very effectively based on historical data. So we've kind of looked at the entire journey. Now we have already reached home in terms of being able to calculate a FOIR and then run it through a scorecard which brings in the application data, the bureau data, the inputs that you saw so far, and gives you yes, no, or refer. That's a decision that goes on. Again, all this is in sub-second, in a time frame, or maybe a minute or so that happens. Because if you take a longer time, apps have timeouts, so it times out if you take longer time to make a decision, or he starts to look at another phone, another app, all of that happens because all of you, anybody who has got a computer open here, will always see about 10 screens minimum open, because for the same subject, we would have opened 5 screens. That's how, how eager we are to get our information very, very quickly. So running through an application scorecard, you get a result out. Then it goes into as a feed into the LOS system, disbursement happens, and then move on, right? So that's how the journey happens. All this is, we've built a platform which can stay outside the LOS and LMS, which is currently running, wherein all this journey is plugged in and the decision is plugged out, and these are all cloud hosted. So it enables agility, scalability, all of that stuff, and redundancy is built extremely well. So we're currently moving entire our platforms, the data and the applications onto GCP, Google Cloud. It's a very large exercise because it's a 2 billion, trade line information has to move up into the cloud, and we got to run it parallelly. So it is almost a 1.5 to 2 years of exercise. But when we come at the other end, I think it'll look phenomenally well for the entire digitization that happens in the country from a lending perspective. So this is the technology platform. To conclude, am I on time? Excellent. So to conclude, frictionless journey, very, very important because, moment there is friction, they switch, or they move to some other app, or they stop the journey. Frictionless journey, so that's very, very important. I put my name and phone number, everything else happens in the background, I get a decision, yes or no, or refer. So that's very, very important. Ability to triangulate differentiated data assets. So different data that you have existing data in the bank, right? Whether it's the liability information or the information of having borrowed from the bank or the payment history of the bank. How do you bring all this together? The information that we have it in the bank, information that's available in the credit bureau, information that you capture as part of the application, information that could be available as alternate data. How do you bring all of that together to make a decision is very, very important. And the right tools for underwriting. I talked about anonymized scorecards or application scorecards, which can bring in all the data to give you a single decision out. Building that model, I think, is super important. And obviously, technologies like ML and AL, helps in, underwriting. Not so much in underwriting, because in underwriting, there's a limitation of how much you can use in, machine learning and AI, because there is always a reference point. It cannot be a moving number in underwriting, but it's very, very useful in the fraud and ID space. And we use it very, very effectively, and it's very useful in the space of insights and analytics. So we use it very, very effectively. So that's in a nutshell, a quick journey of where the industry trends are, where the technologies are moving at this point in time. All I must say, we are delighted to be, partnering with Bob World, and I saw the numbers. I think 2 crore activations. Congratulations for the 2 crore activations and 3 crore registrations. And all that I can say is Bob World is rocking. Thank you.
Thank you so much, sir. We're opening the Q&A section right now. So if anybody would like to ask a question, do raise your hands and he'd be happy to answer.
I ran very fast, so I'm not sure, but still happy to answer questions.
Wow, sir, you were so good. No one has a question to ask. You were so clear. How awesome
I'm not
is
sure
that?
it works both ways.
No, I think this just proves that there's no doubt. So
Excellent.
anybody? Okay, sir, Mr. Handa.
I think people are just shy. You were so good, right? Can you hear me? Yeah. Okay. I thought while of course the numbers have a PL segment, but BNPL seems to be a very I think there's a substantial movement towards BNPL. And to that extent, what I'm now seeing is BNPL is being treated as an extension to a normal transaction, right? And when you treat BNPL as an extension to normal transaction, it's almost like trade credit, but for individuals, right? Now, is there a credit play there, or is there, can the bureau play a significant part there? Also, considering the fact that the transaction times need to be capped, right? Because there are transactions, we have very strict ceilings on transaction times. Can the bureaus effectively deal with it? And how do you just think about BNPL as a segment? I think it'll be good to hear from you.
Excellent. Thank you. I think it's a very good question on the BNPL, which is the emerging topic around the world, BNPL, buy now, pay later, and growing at a phenomenal pace. Now, just to put a bureau perspective, currently the data is not getting reported under BNPL. So we are not able to bring in insights on BNPL very, very clearly from a reporting perspective. But what we are doing are 2 things. One, we're obviously working with the regulator to see if BNPL can be classified and tagged as BNPL and submitted to the bureau, so that we're able to bring in that level of insights and also provide solutions to what you mentioned, Akhil, is about capping of the BNPL ticket sizes. All of that we can bring in only if it is tagged effectively as BNPL. What we're currently doing in the interim is that we are identifying the ticket size and the tenor. Typically, the BNPL ticket sizes are about 5,000 to 10,000. Tenor is about 30 to 45 days. So we have scooped the data out of the bureau to see what's the behavior of loans which are in this ticket size. What's the behavior of what's the velocity that we are seeing? What's the risk that we are seeing? So we're trying to bring in that color, but I think the true color will come when the BNPL submission starts to happen. I think the true color will come, and all the BNPL players start submitting. I think that's also another important point which is missing. So it's largely a work in progress at this point in time, but absolutely there is a role to play by bureaus, and we can bring in phenomenal value into the process of the BNPL, because again, which is to the point that I made, it's a high velocity, small ticket, and it has to be a frictionless journey, because it's at the time of checkout, you're given an option, and this has to go back in sub-seconds. So it's a work in progress at this point in time, Akhil.
Okay, the gentleman right at the corner, at the end. Could you please stand up, sir? Introduce yourself and ask your question.
Good evening, sir. My name is Aprup. Sir, you have explained about the importance of the pre-fill. So how a pre-fill option will be getting more inquiries. So sir, I'm just curious to know, most of our apps are developed, I mean majority, I'll not say all, are developed in the ecosystem of an English language as an primary language. So having vernacular options, do you think there will be a more increase because there's a huge increase from the rural sector?
Excellent, excellent question. I think that's another angle to the customer experience, right? The language, so is a very important angle. We haven't, to be very frank, we haven't solved for it yet. So currently we fill that in English. Maybe there is a scope to translate that into the local language. There are technologies available. But a short answer to your question, you're absolutely spot on in terms of how to use a customer experience. Language is very, very critical in the interface. We have solved it in English. We haven't solved it in converting that into other languages, but that's a good input for us to think about some of the development areas as well. Thank you for that question, actually.
See, questions actually help. So don't be afraid if you have a question. The gentleman over here, please, could you please stand up, sir? So it's also easy for the mic to come to you. So if you stand up, please stand up, introduce yourself. Thank you.
Sitaram. My question is now fintechs and banks, both of them are competing in the digital lending space. Banks have got the cost advantage. Then what do you foresee for the banks, and do they take over the fintechs in the lending?
I think some part of the question I should pass it on to Mr. Sanjeev, that does CMD here on, banks acquiring fintech. So let me give you a perspective. In my view, I think it'll differ. I don't think that they're competing each other. I think they're bringing in more value in terms of reach. I think there is phenomenal scope for partnership between the bank and the fintechs. I don't think fintechs can, and at least in my view, I think compete with the bank. I think the partnership can bring in the value of reach, value of agility, and value of coverage. I think that's phenomenal. I think the partnership is the true spirit of where the fintechs and the banks can come together. I don't see that as a competition at this point in time. I have not seen it, but I think you see a lot of partnerships that are evolving at this point in time between the banks and the fintechs. And to, the broader story of financial inclusion, right? I think if fintechs and either the technology or the fintechs coming together with the bank, the broader story of financial inclusion can be very well, manifested across the country, because that's how you enable access to capital by everybody in the country, either through physical or digital medium. I think that's the partnership is what I see as a potential collaboration between fintechs and banks.
Yeah, good evening, sir. This is Vijay Kumar Baseta. I am the Rajkot Zonal Head. Though this question was, I kept pending for Vipin sir, earlier he spoke here and gave the lecture. But somehow it is relevant now also, because my other fellow friend has asked one question, that why the apps are not being made in vulnerable languages, so that it can go into the mass in the rural areas. Okay. Now the question comes here, sir. Right now we are making the apps for the public, and only those people are using who are in need of some services or some app or some kind of products. It means the bare minimum people of the country are using the apps, not the entire mass. Whereas, like Bobward, we have inbuilt hundreds of services, but people does not know. And it is useful for them also. So how to make them to understand that the apps are coming for us? And though today we are not in need of that services, but tomorrow definitely we will be in need of how to prompt those people. Like I give you one question. एक नारा आया था, कर लो दुनिया मुट्ठी में. उस टाइम लोगों के हाथों में मोबाइल नहीं था. आज बिना मोबाइल के लोग निकलते नहीं है घर से. इसका मतलब टुडे कैन वी assume our life without mobile? No. So likewise, apps are giving hundreds of information, hundreds of applications, hundreds of utilities, hundreds of services, but people are not knowing. Only those people are using which are really in need of that. Or either if some people needs and they don't understand the how to use it, they take the help of others. But my request is whether how to crop up the curiosity among the 99% people who are not at all bothered, not at all knowing, not at all using, not at all taking these apps, whatever may be in the market. Thank you.
Excellent. I think, I think BOB has already found an answer to your question, because the theme of the event is Super App. So Super App is all about how do you bring in multiple services together into one app, so that the engagement levels, for all right, wrong reasons, we were always drawn for an utility based on the need, right? If there is a need, then I look at, as you rightly said, I look at the app, or I look at a web service, or I look at go to an office. Need drives the requirement. So I think the Super App is the right approach to bring in multiple services under one umbrella, so that you build in a phenomenal engagement with the individual. So that there is a more and more usage. I don't think there is a prescription one can write about how do you ensure increased use of an app. I think there is the only way to do is bring in multiple services so that there is an engagement with the app on a constant basis, not only for one particular service of the app. I think that's how possibly you will be able to increase the number of usage and number of people who use the app. I think Super App is absolutely the answer to the question, which I think BOB is already kind of on the journey of building a super app.
So good evening, sir. I am Suresh Gaindran. Sir, during your presentation, I seen that hourly basis there was an inquiry was there. Do you have any insight in which hour? Is 0 hours may there was inquiry is there? What kind of delinquency ratio is there in hourly basis, whether it is the morning or evening? Because the people are more in 0 hours, there was the inquiry was there. Definitely, any kind of insight is there, a delinquency ratio was there, in which hour may. So the banker should be very cautious also.
Your question is, there's somebody applying for a loan at midnight and early morning, 1 a.m. Is that the question?
Yes.
So, there are 2-3 things, right? One is you saw the age group distribution of inquiry, right? How 18 to 21, there's 500% increase in the inquiry level. So, so some of them possibly after dinner decide about applying for a loan, or, what Akhil just talked about, the BNPL is buy now, pay later. You could even take a loan to pay up your dinner, right? So that is one aspect of it, and there are no boundaries for app-based applications, right, in some form. So all different time zones could work as well. So that's what we think, but I really wouldn't have very clear view as to why one would apply for a loan at 2 a.m. in the morning. I would tend to think is, they're making some decision, or there's an emergency, there's a requirement, so they make a decision to apply for a loan, or it's a different time zone geography that they are in, they're applying for a loan. So that's what I would tend to think. But large portion of the traffic is seen in the morning, which is what I talked about between 7 and 8 o'clock. But we'll certainly try and figure out a little bit more on that to see as to what does it speak in terms of somebody applying, performance of those portfolios, right? It's very interesting to see if somebody is applying between 12 a.m. to 3 a.m., what's the performance of the portfolio? Is there a risk in the portfolio, or there's no risk in the portfolio? What's the ticket size? There is a lot more to learn about it, but hopefully next time, if Akhil decides to invite us, we will present that view as well.
Good evening, Girish here. So you are saying that in personal loan, the delinquency ratio of the good evening, Girish Mansani. So you are saying that personal loan, the delinquency ratio of the public sector bank is lower compared to the fintech, but the trend will change for the business loan. So any particular reason for this? Or they are having the better cash flow detail?
So Performance, can you repeat the question? Performance of?
The delinquency ratio.
Delinquency, yes.
Yeah, in the business loan, the fintech is having the low delinquency ratio compared to the PSU bank. So any particular region, they are having the good cash flow detail of the borrower.
So, fintechs have just started the journey, right? So when you start the journey, you're actually, maybe a lot more cautious as well. And the second thing is, the base is very, very small. And, and the PSUs have been in this for a longer time. And the PSU interventions are very, very critical to economy and has happened in many different times when economy was going through different phases. So, but the difference is not very high. I don't have, the difference is not very high between the PSUs and fintechs in terms of the 90 plus on the business loans. So it's a very, very minor difference. I don't know, I would be able to draw very specific insights as to why there's a difference. My answer and response to you was very general in nature, but more than happy to do a little bit more work on it to see as to why there's a difference in the performance levels. Yeah, so we could check on that.
Sir, okay, this would be our last question. All right, so thank you.
Sir, Rangarajan,
good evening.
Rangarajan from Zonal 8 Chennai, sir. Digital lending per se, it works more on this unsecured loans and large volume of transactions. Comparatively, in your slides also, comparatively that business loan segment, in digital lending segment, it has not grown much. Because certain complications are there, when secure transaction comes, there are more complications involved. Going ahead, the way in which it is working in the unsecured loans like personal loans and other unsecured loans, in the business loan segment, that much it has not grown. Going ahead, where the challenges, it will be overcome, or what's your view about it, sir?
Again, I think a very, very, very critical question that everybody is trying to find an answer. So it's all about availability of data, right? Why is it working in PL? Why is it working in CDs? Because the bureaus have phenomenal, we have phenomenal amount of data to present an insight back of the borrower to make an underwriting decision. On the business loans, I think there are still data points which are not available, which requires verification, maybe sometimes field visits, even address verification, all of that. I think some of the initiatives that are happening through common registration references that are required as mandatory requirements on business loans, I think will bring in a lot more ease of the process. But I think it's more data that will help in improving the decisioning on the business loans. The way to think through this is business loans, you do an in-principle approval subject to verification so that you keep the customer engaged, saying that, okay, you have an in-principle approval of, say, 1 lakh or 2 lakh, but go through the next step of doing the verifications in a bank or a branch, and then make an approval. Could be the intermediary step of keeping the customer engaged, that he knows, he or she knows that, yes, I would get a loan of 5 lakhs if I present all these documents back to the bank. So that would be an interim step. But to your point, it's about data, the availability of comprehensive data about, especially the MSMEs and SMEs. We're trying to access data as much as we can, but it's not been easy at this point in time. We are talking to Ministry of Corporate Affairs to see if we can access the MCA data to bring in a little bit more value into the credit bureau data that we bring in, but that's a work in progress. So my answer from a data analytics company point of view would be a data, but there are ways that is getting solved is by in-principle approvals are being given for such journeys where there needs more verification and validations.
Thank you so much. So from no questions, imagine that. Wow. That was excellent. Thank you so much, sir.
Thank you. Thank you, Mr. Sanjeev Chadha, and thank you, Akhil, for the invite.
Wow. This was awesome. I'm going to change the mic.
See the height difference? Okay. So I must say, after
CGM, DPSS, RBI. Welcome, sir. How are you doing today? Oh, I'll give you this mic because, do you have a caller mic? Okay, thank you.
Good evening, everyone. I hope I am audible. Thank you. And it's my pleasure to be part of this event, which is organized by BOB. Hearty congratulations to the entire team at BOB for having this digital conclave. So I really admire the support and initiative of the top management of BOB for facilitating this. Also, a big round of applause to all those performers who have come here and for whom this digital conclave is being arranged. It indeed looks nice and colorful here with so many people sitting across the room that we are in a physical setting. Let me also try to share a little bit of what we do and how we do and why we do as well when we look at the regulatory framework. I am going to be unlike the earlier two speakers. Bipin was talking virtually, so I am here physically. And of course, Mr. Nanaya was also having a couple of slides to show. I have no slides to share. But we will try to make it as discussion-oriented as possible. I definitely don't have plans for the questions to come at the end. You can ask me whenever and however you feel comfortable. Sometimes you may not get a real good answer because I understand that the show is being recorded as well. So I will have to be a little careful. But wherever possible, let me try to share whatever insights we can. The topic is about evolving regulatory framework for digital transactions. The digital transactions are not something that are new these days or that have been there only from the recent years. Transactions have always been digital. Transactions have always been happening for so many decades. But if you look at the way the payment systems have grown, it also shows how important it is for every one of us here and everywhere else as practitioners, as users, that when we talk about a digital conclave, we are also talking about not just digital lending or digital asset creation or digital products being there on the liability side as well. We are looking at digital payments. And some of you might be aware that when you look at digital payments, it may not be on your balance sheet for long. It just comes in and goes out. So what are we trying to do and why are we trying to spend so much time on digital transactions? You heard of Bipin mention about the super app. You also saw about the various data points that are there in a decision-making process. And every time we do a transaction, every time we do something on the app or even on any other payment mode, we are leaving certain footprints. And when we are leaving those footprints, it becomes very, very critical for us to understand what we are leaving and how well can we be safe about those transactions and those activities. That's where we try to come in. Sometimes an advantage is there that the regulator gets to speak last on a day. And I am also in between your dinner session that's going to be there. So don't blame me if I take a little bit of extra time as well. And of course, many thanks to Mr. Akhil and team for putting this through and pulling me out of Mumbai to Goa as well. It's always a wonderful place to be in, and it's a pleasure to be amidst you. First and foremost is whenever we look at any regulatory process, we are looking at safety and security. And because money, again, I remember Bipin when he was saying that everybody worries about their money, but in the payment process, everybody else worries about your money. So how do you safeguard about that? What are the things that we need to do? So all our activities are typically to ensure that the safety and security of transactions are paramount and they are very well taken care of. It may come at the cost of certain things like maybe innovation sometimes even at the cost of losing out of revenue. So when we look at safety and security, we don't look at anything else at all. So right from the time the payments were there, as I was talking, maybe when I go back, say, 2 decades ago, we had only the check clearing that was there. And maybe ECS also had started where we were making bulk payments. I don't know, many of the youngsters may not have even heard of the word or phrase ECS. Now you must have heard of NACH. So ECS is the precursor to the NACH era. So when we look at these transactions happening and when we see the money flowing through, it's all instantaneous. And especially in the present day world, everything is 24/7. You were hearing about the interest in some loan activity happening at the wee hours. All transaction happens all through the day and evenings as well. Yesterday, I think we were watching the IPL match between Mumbai Indians and Lucknow Super Giants, and I did hear that some of the transactions in UPI were failing. Because you do understand that a lot of people have activity that happens during these games because of many other interests that are coming out. So it becomes very important to see that these transactions do not actually have any latency or delinquency irrespective of the time of the day or night or even weekends. All our payment systems have now become 24/7 by 365. So that also entails us into many other challenges that we need to handle while we process or manage these transactions. When we look at the safety and security of transactions, we are looking at the safety and security of data. First and foremost is the data security that we should be taking care of. And when we talk about data, I did mention about the footprints that we leave. So it also becomes critical that the data that these entities store, the data that these entities have with them, how well are they making use of it, and for what all purposes are they making use of this data for. So that is where, if you would have heard of, we have come out certain requirements like local storage of payment system data. We believe that if an originator and beneficiary, if they are in the same country or in the same city or in the same town, what is the need for this data to go out? So there could be an expectation that yes, data could be taken out for processing requirements because many of these players, many of these participants also have their processing activities abroad. Many of these foreign banks, if you know, also keep their core banking systems outside the country because they feel that for one or two branches or a small set of activities that happen in the country, why should we replicate the entire core banking here? So when we have these data being taken out for processing, we also need to ensure that it is brought back after processing. So all we have said in our data storage requirement is that a payment transaction, once it is done between two parties, if it is not a cross-border, that means if it's a domestic transaction, the payment should be brought back to the country within 24 hours of processing. And each of the systems that are hosting the data should be in the country, and we also expect the data to be subjected to some system audits because we don't understand technology as much as people who are using the data do. So we always think that it is better that these systems are audited by an experienced set of people and they tell us that yes, the systems are having their data here and data is not being used for any other purpose. So that is a simple thing that we do. So as we see more and more data being used, today, as on date, maybe we are processing around 26 crore transactions every day. 26 crore transactions every day for value close to around 7 lakh crore rupees or 7 trillion rupees. Just imagine the number of transactions that will be there. And we have all types of data, small 1 rupee transactions to large value transactions. And all these transactions, as I said, happen 24/7. So much of data is being used by everyone. And this data is typically the entry point for anyone to enter into the financial services space. People go by our behavior, people go by what type of maybe internet connections you have, whether it is broadband, prepaid, postpaid, mobile connections, all those systems are giving you the data. And from the data points, for example, if I make a bill payment, I always use this. If I make a bill payment for paying my mobile connection, then I can be tracked by the way whether it's a prepaid connection or a postpaid connection, how much is the internet data I use. So all these things are available for everyone to see. And using this data, they can sell me some packages, they can try to give me certain schemes, which I may not want, but they feel that I may be required. So we also need to see that what are the purposes for which the data is being used and where are all it is being used for. And one of the concerns that we also have been seeing over a period of time is about these entities that come into the space. Why I am bringing this payment systems and these entities which are using the data is to also highlight the fact that why has India started attracting so much of fintech investments? Why has India become the hub for many of the big techs to come and set base? That's all because of the huge market that we have and the huge set of data that we offer them. And using this data, they can enter into any other space they want. You would have seen many of the recent announcements about some of these big tech players trying to partner with banks to provide them, say, customer onboarding facilities. So fintechs can come in as a front end, fintechs can come in as a back end. The banks will be only watching some of these activities happen. Banks may not even know how their data is being used or who are all the customers for whom these services are being provided. So when we look at some of these fintechs who are providing these services to the commercial banks, maybe small, maybe big, you actually see that the transaction flows through these big techs or fintechs, and then it hits the balance sheet of the banks. We have been generally having an approach that is bank-led. So when I say bank-led, that I only mean that the balance sheet should be of the bank. That means the funds should be with the bank. And the non-banks are most welcome to do any activities without having any relevance or recourse to the funds flow. So if you look at any of the prepaid payment instrument issuers, like the earlier speaker was talking, MobiKwik or anyone, even if it's a wallet issuer, they all can keep funds with them only at the point when it is loaded. After that, the money has to go to a bank. And from the bank's balance sheet only, these funds get moved out. We have even said for what purposes the money can be used for and who all can use this money for. So it's very clear, because banks are institutions of trust. We don't want to make this any less sacrosanct than what it exists already. Non-banks are here for providing innovation. Let them provide the front end, let them provide the innovation, let customers enjoy the best of both the worlds. But slowly, this trend seems to be changing, because many of the banks who are in this facility or in this sphere and providing these services to non-banks, if you see over a period of time, they have become a little lax in their activities. We are not seeing much of innovations happening. Don't take me personally if I mention that banks are not doing so, etc. I'm not referring to a single bank. I'm not also making this statement here because all the people are from BOB here. It doesn't have any such relevance. But what I'm saying is that if you are in the payment space, you need to be active on both sides. It's not just about, say, issuing a debit card or a credit card and forgetting about everything else. If I have issued a credit card or if I have issued a debit card, I also need to see that I provide the acceptance infrastructure, or I support providing of these acceptance infrastructure for these cards to be used. This is where we see a huge difference between two sets of banks. One is on the issuing side and one is on the acquiring side. And when we talk about the acquiring side, let us assume that India is a huge market. I always think that India can actually provide more innovations to the world at large. But if you see, we may have around 1,100 plus banks who are issuing cards. I am talking about the debit cards. But how many of the banks are on the acquiring side? I can count at least maybe hardly 8 or 10 banks. And it is not a difficult activity at all. If small guys can do, if newcomers can do, why can't the existing well-set people, why can't they not do this? So we always expect that everybody who is providing these services play on both sides of the coin, play on both sides of the table. That is where we can make this ecosystem more competitive, make it more difficult for new players to come in. It shouldn't be like that they can just enter into a partnership and start doing business. So we need to be very, very conscious about why we are not able to provide the same service that these people are able to provide. So let us look at, for example, today we have 100 crore cards, 92 crore debit cards and almost 8 crore credit cards. How many acceptance points are there? How many merchants are there who have got these facilities? It does not always necessitate the regulator to come forward and say that let me help in building up the acceptance infrastructure. If you have been hearing, we have set up something called as the Payment Infrastructure Development Fund, PIDF, that was set up in January 1, 2021. So we have just completed 16 or 15 and a half months of the PIDF fund. We have collected almost 750 crore rupees from everyone. So we have said that Reserve Bank will contribute 250 crores we have contributed. We've also made all the card issuers and card networks also contribute to the fund, saying that we'll subsidize setting up of acceptance infrastructure, be it POS machines, be it QR codes, be it mobile POS, we are willing to subsidize. And going up to the extent where tier 3 to 6 centers, the northeastern states, the Jammu and Kashmir region, we have said that we are willing to subsidize up to 60 to 70% of the POS machine that needs to be given to a merchant. Let us assume the POS machine may cost around 10,000 rupees. Here is a subsidy that's easily available for you just on a declaration basis. If you want to set up a QR code, I don't know what will be the cost of a QR code. We have taken around 300 rupees as the cost of a QR code. That includes going to the merchant and installing the QR code. But fortunately or unfortunately, the uptake has not been much. We are in a world of problems where it is all first world problems. Like we have money, but we are not able to give the money. We did have a meeting day before when we told the people who are participating, please tell the community of yours, non-banks, banks, etc., to please come and take money from us. We told IBA, we told the Payments Council of India, please tell all the people to take money from us. But I don't know why everybody is interested in giving money to RBI, but nobody wants to take money from RBI. We'll be honestly very happy to give money. I'll be very happy if you use your tentacles to tell everyone that let us have this acceptance infrastructure at all places, all merchants, and let us try to see that they make it subsidized. And so definitely it's not a good a place for me to stand with full of commercial bankers here to say that you will not make money out of payments. No, I will be shot dead, because no, we are saying that payments will be made free. We are not charging anyone for payments. UPI is available for free. There is no MDR and debit cards if it's rupee. But where do you make money from? You can make money from these schemes that are available for the merchants, etc. Kindly make best use of it. And when we talk about some of these initiatives that we have been taking, I just want to make it an evolving regulatory framework, or evolving regulatory framework for digital transactions. I just want to mention, we also do not have any set goals as to how we are going to achieve or what we are going to do. But in the Reserve Bank, what we have been largely doing is, for the payment systems, we come out with a vision document. And that vision document is typically brought out every 3 years. The present vision document, which we were using, expired or had its shelf life expiring on March 31, 2022. So the next vision document is just being discussed, and we are going to probably have the next vision document coming. That is Vision 2025. So we do have a set of activities that we feel will be useful for the ecosystem. Some of these activities may not be useful. As we go ahead, we'll have to see how these things pick up. So we are willing to reinvent, we are willing to learn, we are willing to take data, we are willing to learn from experience. For example, UPI, we all know UPI is a very good product. Mention was being made up probably about it being a very, very good system. The globe is wanting to use UPI. People want to come to India to learn about UPI, and people want to implement UPI in their own countries. But we have to be very careful about this, because we don't want our system to be compromised just because we handshake with another country. So we are extremely careful about the types of relationships we are having, but are equally confident of earning by giving UPI to other jurisdictions. Let it be an export of services. Let it be an export of thoughts. Let it be an export of practices that we have in place. Many of the practices that we have in our country, we feel that this can be equally used by any other jurisdiction elsewhere. For example, UPI is available on all smartphones. But even if you see among smartphones, there are a couple of smartphone apps that are quite popular because what was being talked about as a super app or a super phone, etc. But there are certain features that can be brought in and that can be done by anyone. We feel that if you see in the UPI space also, there are hardly a few players who are having this significant market share. There are many of the players who are just participating. That is where we expect people to become much more than mere participants. For example, on date, we have around 317 banks that are members of UPI. I have the share of each of the banks. I can easily tell what each of the banks have. So what we are trying to tell the managements of banks is also about how serious are you about participating, what all should we be doing more. So we are telling NPCI that you please publish this data on your website. Let the banks know where we figure vis-a-vis the other banks and what we can do more to improve our share. Similarly, when I say participating, I just don't mean that it is about the number of users onboarded or number of transactions done. It's about performance. Performance includes declines. Performance includes declines being divided into technical declines and business declines. I did make a mention about what happened in the IPL match yesterday when some of the banks had some declines. We are watching all these things pretty closely. We will be also taking up with the management of banks to see why the declines are happening, what are they doing to invest so that technology upgradation is good and people have better experience in terms of latency, in terms of behavior as well. So those things will happen from our side. Those things will continue to happen from the NPCI side as well. We'll be keeping them also active by giving these action points to them. So just because of last evening's incident, a couple of action points have already been given to them. We will be discussing about this much more going forward. And internally also, let me tell you, just like you have the entire top management of BOB here, internally also our activities are being directed right from the top. It's the governor who directs and expects lots of things from all of us. So he is very passionate, and the board that is there at the top, chaired by the governor, we have external experts, all deputy governors are members. They are the ones who are actively monitoring, including Twitter complaints. The life has become quite tough 24/7 because people do wake up at 3 a.m., 4 a.m. in the night to write on some Twitter, some things which they feel make sense only to them, because at that time I don't know what they write. Some of these things you would have seen. They're very difficult to decipher in the morning. So those complaints do come and they can use any language they want. So we have to be extremely careful of that, and it is not about one bank or one institution, it can be about the entire system. So we have to be very careful about our presence everywhere as well. So when I say that we are trying to bring in more features, And we also, like I said, think on the feet. For example, we saw that during the recent years or months when liquidity is so good in the system, and many people are investing in the IPOs. So we thought that the UPI experience for IPOs is very good. People have got a good acceptance rate in terms of their experience. So we thought, let us increase the amount that can be invested in UPI, in IPO through UPI. We increase the amount so that you can have the facility of a block mandate on UPI. That you apply for an IPO, you just see how much you are given in terms of the shares. According to that, your money will be taken from the account. So till then, the money is safe in the bank account. Your money will continue to earn whatever interest it requires. So you are only parting to the extent you are giving allotment. Now, today there is another expectation that why can't we do it for secondary market purchases? Why only for IPO? Why can't we do it for secondary market in the sense, if I'm placing an order for 10,000 shares or securities of some company, I may not get all the allotment, I may get some. So why should I part my money beforehand? And if you see the settlement cycle there, it's not T+1 or T+0 that we normally are used to. It's much more than that. And especially for some of the activities, if I pay money and if the refund has to happen, it doesn't happen instantaneously. It says you will get your refund within 7 days, 5 days, 9 days, etc. When the money goes out quickly, why can't it come back easily, quickly as well? So those are the things we are working on. Some more things you will see going forward as well. One mention was made by one of the colleagues about why not make things vernacular. Why not we give some of these things to the people who do not have, say, these super phones or super apps? So that is where the governor recently launched UPI 123 Pay, where we are looking at 40 crore subscribers. Unfortunately or fortunately, I don't use million, billion because that is not our way. I use crore, I use lakhs only. So we still believe that 40 crore subscribers can come into the payment space just by one particular feature that is available. And let me tell you how the thinking happens is that we are always a jugaad set of people. No? A lot of things we think during different times of the day, year, etc. in different ways. I have seen many of the kids making telephone calls, etc. without actually paying money because they do something called as missed call. They just give a missed call, somebody else calls back, etc. Even probably some of them just give a missed call to the dad or mom and they call back. Similarly, we have done something for the payments in UPI or using future phones. You don't have to do anything, just give a missed call. The system will call back, you can complete your payment. That is, even if you do not have balance in your mobile phone, still you can complete the transaction. So that is one feature. Second feature we have also done is, many of the people are comfortable just by calling a number and doing a particular activity. The number will take you through further what we call as IVRS. So many of the gas bookings, Bharat gas bookings, they are all happening through these IVRS-based systems. So many of the experiences are extremely good. Going forward, you will see more features coming in. I don't want to give away some of the regulatory thought processes that we are having. Similarly, we are also doing many of the things in terms of places where connectivity is not there. So connectivity is a real issue in many places. While it may be urban cities or it may be good places where connectivity is there, it's also difficult for somebody to complete the transaction when connectivity is not there. So we are very bullish on bringing in payments where there is no connectivity. That means we are looking at people who are having no phones. We are looking at places where there are no connectivity. That's how the entire ecosystem is going to evolve in the next couple of months. I am saying evolve not because some things are only on thought. It's already been issued and implemented. We are waiting for more people to come onto the bandwagon. We are very closely watching how many banks are in, how many banks are not in, who are all not participating. Tomorrow, day after, we may even look at giving certain regulatory approvals only based on the performance in these schemes which have been announced. It is not necessary that everything is made available and nobody picks up. See, it's always a give and take. Kindly pardon us if we are seen to be a little carrot and stick theory type of economists, but that's what I feel actually moves the market. So we are going to be extremely involved in all these things. And one more initiative, as I was mentioning earlier, UPI is very good and people across the world want UPI as well. Now we are also trying to bring the same experience for every domestic user when he does or she does an international transaction as well. Sitting at the comfort of one's home, why can't we make a transaction to Singapore? or receive money from Singapore. So Indo-Singapore linkage has already been announced. We are working towards establishing a connection between our fast payment system, that is UPI, and Singapore's fast payment system, that is PayNow. Just imagine, India is the highest recipient of remittances. $83 billion we receive remittances. So we are going to look at all those corridors where these remittances are coming from. Singapore, Middle East, North America, everywhere we are looking at, we are trying to see that the money that comes in can come at least couple of days quickly and couple of dollars cheap. Just imagine $83 billion can easily be $100 billion. And instead of 3 days it takes for anybody to receive money, it can be just 30 seconds or 30 minutes. This may not be a real good commercial sense for commercial bankers, but I am saying that you please don't look at every silo to generate revenue for you. Please look at these things as only a stepping block or stepping stone for further things that can happen. Just imagine the money comes into the bank account and you don't let him take out because you can give him many other incentives. Where do we see situations where a police constable is stopping a guy and the guy buys an insurance on the spot? You are seeing all those TV commercials coming in. Those are the products that are available. I think you can make tremendous use of the money that's going to be there. Our intention is that the money comes in electronically, the money stays electronically, people can use the money. I'm not too sure how many of the people who are seniors like me, we had never had the luxury of moving out of our house or out of our city without a wallet in pocket. We always used to have a wallet in pocket, and we always used to count how much cash we had when we went out. But I'm also very sure some of the bankers and some of the youngsters at the back can still move out without having a wallet in their pocket. You can make a transaction for a few rupees or even for a few paises electronically without paying money. But all these things will definitely come at a cost, because if you see in a particular, let us take UPI transaction itself. You know how many players are there in a single UPI transaction for it to go through in milliseconds? At least 8 to 10 major banks will be involved to see that the entire transaction chain completes. And for them to push up or pull up these investments and without expecting anything in return is going to be very tough. So we have to see that we balance the investments, and we also see that they earn money for their investments. I mean, I'm not saying that you earn money only from UPI. See, if you look at some of the statements made by some of the eminent bankers as well, that my footprint in the branches has come down significantly. Many of them have been saying it's all thanks to these apps, internet banking, mobile banking, etc. Many of the footfalls has actually significantly been reduced. So it is time for us to look at the physical infrastructure to be at what it is without investing much in the physical infrastructure. Let us look at the digital infrastructure being upscaled. Let BOB also have a super app. Tomorrow I'll be very happy. I wanted to raise my hand and say Amazon, but they will always say regulator gets away with the price. I didn't want to say. But I'll be very happy in the next conclave to hear BOB having the super app. Absolutely possible. Absolutely possible. It's all based on experience. It's all based on the facilities that you have, putting them in an app and seeing that the user experience is never compromised. The most important thing is to give attention to the user experience. If we handle, say, 26 crore transactions a day, even sometimes I get 1 or 2 messages or 1 or 2 mails on my email saying that this transaction did not go through for 500 rupees. I will follow it up and see that the transaction is resolved. It doesn't matter whether it's 500 rupees or 100 rupees or 1 day or 2 days. The system has to be in place to handle every complaint. So we have said very clearly that you have to have an online dispute resolution system. That means if I make a transaction, I should know where my transaction is. If I don't see the transaction completed, I should get back my money or I should get back my penalty. We are not here to see whether the penalty is 100 rupees for a 10 rupee transaction or penalty is 200 rupees for a 10,000 rupee transaction. Nothing of that. It's about principle. So we will be monitoring each and every bank's performance to see how many complaints have been received, how many have been resolved to whose satisfaction. So those things are all being monitored. You would have seen that we have upscaled our ombudsman infrastructure. We have also upscaled number of other things that we see to track complaints. And each and every bank is monitored. Each and every non-bank is also monitored. And those things probably will also be published on the websites. Our data we are now publishing by the day. A lot of pressure, a lot of expectations from everyone that let the data be entity specific as well. So we might be publishing a lot of data that is entity specific, including how many complaints resolved, how much of time taken to resolve, what is the penalty paid, everything will be on the website. Let people take a decision. Everybody is public, every shares are listed. Let the people take a decision which bank to go with, which entity to go with. So we are here to provide the competition. As we say in our payment system vision, we are here to provide a bouquet of services. Let the bouquet contain whatever systems, whatever expectations people have. So these are the things that keep happening. We will be I will be failing in my duty if I don't talk about the behavior of digital transactions during the pandemic. 24 months of lockdown. From March 2020, I remember we were all sitting in office on a particular evening on March 2020, and suddenly this panic and situation about the pandemic. It was almost a couple of us sitting, a couple of days discussion. We set up the entire war room to handle these transactions and a separate area altogether, fully sanitized. But more than that, I am very happy to say that in spite of the hurdles that were there for bankers to move, go to the branches, even for people to move out of their homes, all the DBT transfers, the direct benefit transfers of the government, were all made only through the electronic payment systems. And just imagine the announcement being made that the money has to go to 40 crore beneficiaries or 20 crore beneficiaries, 8,000 rupees, etc. All those things being handled by the payment systems. And some of those announcements were made on a Saturday evening or on a Sunday morning. Still the systems went through, thanks to all the bankers, thanks to all the systems, thanks to everyone. And let me honestly share with you one feedback. Everybody talks about India as one of the superior countries in terms of payment systems. It is because of the enablers that are in place, including the Aadhaar infrastructure that is in place already, where my biometric is there, I can use my iris for identity, etc. 138 crore database records are all there. Now, this Aadhaar database can be used for multiple purposes, and investment is quite huge. But just by one scheme, that is DBT, the entire investment in Aadhaar has been recovered. The savings in terms of these leakages, the delays, have all been taken care of. And honestly, it's a very good feeling to hear from other jurisdictions when they come to us and say that, please just replicate your systems in our countries. And they are all very advanced countries, by the way. And in every meeting of the government or even at the top management in RBI, whenever these other jurisdictions come, always now a session is there on payment system. They want us to tell them what we have done and why it cannot be done in their jurisdiction. We want to capitalize on that. We want to go ahead on that. But one of the things we should always be very careful about is just the theme is being evolving regulatory framework is about the geopolitical risks. Now, just imagine. Again, I don't know how many of you were in the bank 20 years back. In 2001, etc., we had to set up certain systems ourselves. You must have heard of SFMS that we use in NEFT and RTGS. You must have heard of Infinite that we use for our payment systems. We had to set up those systems in our country because SWIFT was the only system available then for overseas transactions or cross-border transactions. SWIFT also, we were looking at them to establish some systems for us in India. But SWIFT, we requested that since, as I said about payment data, since the data is going to be of ours, why don't we set up a server in the country? SWIFT said no. We cannot really alter our overseas systems, global systems. We will be actually diluting their confidentiality, etc., etc. So we said, okay, then we have to develop SFMS, we have to develop Infinite. Now we are self-sufficient. SWIFT recently came back to us, said that we are willing to abide by all your terms and conditions. Please let us have a server in the country. But we said that now we are very self-sufficient. Probably we will look at you if we need later. That gives us a real strength of confidence when we are looking at all these geopolitical issues. How do we ring-fence our systems irrespective of who the vendor is, where the vendor is staying, with whom is she having partnerships with? If you look at some of those players who are active in certain payment systems, I don't want to take names, I don't want to, everybody wants to be in India, they're willing to even abide by many of the terms and conditions, but we also have to be very wary of the risks that entail upon us if you do not ring fence ourselves. So our whole intention will be to see that we are also ring-fenced when these geopolitical situations arise. So that is going to be one of the themes when we will probably be coming out with our next vision document as well. As I said, safety security is paramount. No one will dilute any of these things. I don't know how many of you use cards. I did mention about the number of cards you have. our India has. But what we are trying to do is use the card, but not use the way a card is supposed to be used for. I have a debit card, I have a credit card. I know for what purposes it can be used for, but I will ensure its safety in such a way that you will not use the card. Means, like your interoperable cardless cash withdrawal transaction that was recently announced. You will go to an ATM, you will scan the QR code on the ATM, your card will be used as a means for identifying your balance and debiting your account, etc., but you will never touch your card on the ATM machine. Isn't it beautiful? You will never need to use your card on the ATM machine. You can do it through other systems. That is what we are going to already announced. We will be issuing instructions and seeing that this happens. Similarly, when we go online, see, we also have a lot of data about frauds. So what we do is when we analyze the data about frauds, we see that people who are using these cards, etc., online for online purposes, the frauds are increasing, are high there vis-a-vis the places where the person is physically present. So we are trying to ring fence that. That is where we came out with the guidelines on card tokenization. That means your data is available on the online sites, etc., but data was already been leaked also by many people, so we have to be very careful about that. So we said that nobody can store data from this particular date onwards. If at all the card data has to be stored, we know a card issuing bank, it knows its customers, it knows to whom the card has been issued. So they are very much entitled to store the card data. Similarly, the card networks, because the data goes through them, it is their card or their scheme which you are using for issuance. So these are the only two people who are entitled to accept or store card data. Rest should not. So that is where when we said that the merchants and anybody else should not store data from July 1. You would have seen every day in and every day out, huge brickbats and bouquets. Bouquets, unfortunately or fortunately, come to us one-to-one when we have the meetings. Everybody comes and appreciates, you have done a wonderful job, I'm very happy personally. But if I ask them to say the same thing in public, they will say, no, sir, it's very difficult because I'm looking at something else. I'm looking at my upstream partners, I'm looking at my downstream partners. I said, we don't want. If you are to tell us something, please tell us in the open, we will answer. So we are going to devalue. Devalue means not reduce the value of your card or anything. Devalue its usage even if the data is lost. Because what the data will be lost is the tokenized data. It doesn't really matter even if the data goes out in the public domain. Because believe me, internationally there's nothing called as 2FA. Just you go on to a .com site and pay money, it will go without any PIN or OTP coming to you. Only in domestic transactions these things are there. So we want to ensure that the data, if it is lost, nobody else will make use of the data. So we are trying to see that the card, as I said, is going to be important in usage, but not the way it is used for generally by us. So you can keep your card at home, you can do the transaction using that card because you have a tokenized data that is available on your mobile phone, or it's stored in the tokenized way in some other site, etc., which you are not going to lose even if the data is lost. As I said, I can continue for a couple of hours as well, but I will be very happy if you raise questions and we can discuss further, because I just thought that you are all very, like you have to enjoy the event, because it's a celebration of your performance, it's a celebration of good things to come. So I'll be very happy if you feel that there are more things which the regulator should do, or if you feel that more things can come out of a commercial bank, we'll be very happy to hear. So please don't hold back your question, because somebody was saying that I wanted to ask a question when Bipin was talking, but I held my question back. Please don't do. Please ask whenever you want. So we will be having these approaches. As I said, vision document is one thing we are looking at. As I said, cross-border transactions, multiple activities are already lined up. We are looking at cross-border transactions taking the stage. Data is one thing we are very much sacrosanct about. We are going to see that the data doesn't get misused. Safety, security will always be there. Cost. Reserve Bank doesn't charge anything from any of the systems that it provides. Reserve Bank has always been at the forefront when setting up technology. I remember times when we were setting up the micro check clearing centers, check processing centers. The machines used to be as big as this room. And nobody was even willing to bet on technology at that time, but we have invested a lot of money. And when the time came, we gave it to commercial banks saying that you start making money on this, you do that. I remember in my last stay in the department, we were looking at the future of payments. That is when we set up NPCI. Just imagine 2008 when we set up NPCI, asked all the banks to come forward and set up NPCI. We were also discussing what all the things should be given to NPCI to make it a little viable. So we gave our check truncation to them, system to them to say that please use this and try to have your seed earnings from this. We gave our national financial switch for ATM transactions, start getting some revenue out of this. That's how other systems came into place: IMPS, RuPay, UPI, Bharat Bill Payment System, NETC. So many other systems have come. Our intention is to see that for every particular activity of yours, be it for toll payments, be it for bill payments, be it for mobility payments, small value, large value, everything should be digital. FASTag, we all know it is used on the car windshield for toll purposes. Experiments are already on. It is being used for parking payments, vehicle parking payments. Experiments are already on. It will be used for fuel payments. Anything and everything is possible if one base technology. And thankfully, because our systems are 24/7, I use the word pandemic to talk about direct benefit transfers. Let me also use the word pandemic to say that we did 24/7 RTGS during the pandemic. Incidentally, that has helped us reduce the risks in the system both for settlement and for credit, because all settlements now happen Saturday, Sunday or holiday. And earlier we were running, say, 1,500 settlements a month. When we say RTGS settlements, all payment systems settle in RTGS only. Purest form of settlement because it is central bank money. UPI, IMPS, NFS, Bharat Bill Payment System, RuPay, everything settled in RTGS only. So we were having around 1,500 settlements earlier. Because of 24/7, we have increased to 2,200 settlements every month. That means 48% increase in the number of settlements. And liquidity support is available for people who use RTGS 24/7 also. So we want to use this as an infrastructure when we are going cross-border. Any transaction of any country can be settled here. And we also want to ensure that the payment space continues to benefit from innovation. That is where we have said, why should the non-banks, fintechs, etc., come through only the banks? I said bank-led model was good, but we want banks also to leapfrog and innovate. So we said that we are willing to directly onboard onto our systems. So RTGS, NEFT, central bank accounts, all are available for the non-banks as well. Just imagine when they start using, what will happen. The float, etc., will be a thing of the past. So we have to find out ways in which we engage them and hold their money back. Please don't think of this as any alarming situation. This is going to be the best win for everyone, because we'll have innovations coming in, we'll have the trust of banking also coming in, we'll try to make the payment systems a better ecospace. Don't be so serious, we can always see, as a consumer, you would have really experienced that you just go to a shop, you make a payment, it happens instantaneously, and sometimes you don't even have to see the mobile for the debit. The small buzz inside the pocket gives you the confidence that, yes, I've got an alert, probably it's for the debit of my account. That's all we need, the comfort. Forget about wallet, forget about card, forget about anything. Tomorrow probably we'll be coming out certain things where you don't even need the mobile phone. So please keep the mobile phone also at home. We'll still have some transactions happening. So that is the power of these payments, that is the power of this technology, that is the power of innovation, that is the power of India. And we want to make India the #1 country going ahead, just like BOB is probably the #1 bank in innovation. I stop here. I'll be very happy to take any questions.
Thank you so much, sir. There is a gentleman over there. Could you please hand over the mic to him? Please stand up, sir. Thank you.
Is it my bottle of water?
Hello, sir. Sir, my question is, recently NPCI launched that UPI Lite. In that the amount has been restricted to something 200 rupees. Can we extend it to the UPI so that it will reduce the data tracking, sir?
Can we extend that to UPI?
Yes, sir. As it is UPI, it is restricted to 200 rupees. Yes, yes. That is called offline payment, sir. That we will do in the basis of offline payment, without the interference of any internet.
Yeah, I know, but have you tried UPI Lite?
No, sir.
Please try, because UPI Lite is yet to be taken up by banks. It is still in pilot stage. There is a purpose for UPI Lite. There is a purpose why we have suggested that UPI Lite should be used. Sit down. It's okay. Sit down. So I was saying about the rise in transactions during certain activities or certain occasions. We are okay if there is a significant increase in transactions during this annual sale, etc., or Dasara, Diwali, Holi, etc. Those are all fine. But just imagine when some events are happening, the IPL matches. I don't want to take IPL, but generally some of these events, sports events, etc., now happening. A lot of gaming and betting and other things are also happening, where you can just do certain things by putting 1 rupee or just making a small activity by spending 1 rupee. And most of the I said we are a jugaad people for not one reason, for a couple of reasons as well. We spend a lot of time on our apps only for checking the balance. Honestly, no transaction would have come, salary doesn't come every day. But people do check the balance every now and then. 50 to 60% of our transactions in payment systems are because of balance checking. You would have also seen at your ATMs, many people come just to check the balance. And they don't stop at just seeing the balance on screen, they want a thermal printout also. Similarly, even here also the same thing is there. So certain things are being done to see that the volume shift or volume increase is couple of X's, 3x, 4x, 5x during these events. And the average cost of a transaction is also high. We did a study, for every rupee of transaction that we make, we spend 80 paise. We means the system spends 80 paise for a transaction. And just imagine these things are being available free, people are enjoying. But one advantage we thought was, the small value transactions, if the customer is comfortable, if he doesn't want a OTP or if he doesn't want a message at that time to his account, we can also ease the load on the core banking systems of the banks. So if these transactions can be processed outside core banking, means the balance will be of the customer kept in a separate place. That separate place will be accessed by these apps when payment transactions are required. This particular place will be debited. I am not giving that a particular name because that is still being discussed. I'm just saying it's a place. So it's a separate place where the money is there. This separate place is from where the amount will be debited. The core banking is not impacted. And at the end of the day, let us say midnight or whenever the situation is comfortable for the bank systems, the balance will be transferred or the balance will be reconciled. So the idea is to provide an offline portion for online activity like UPI. The 200 rupees we thought is very good, because let me tell you that these amounts are all not thought of as a random number. So we did a pilot for 1 year and we did try to see what is the average number of transactions that is done. And incidentally, the pilot was, as I said, there are places where connectivity is good, but there are pockets where connectivity may not be allowed or good. So this experiment was done in the parliamentary canteen in Delhi. See, they have a good connectivity, but you cannot use the network inside. So offline portion was tried there. Average value of a transaction there was only 49 rupees. So we thought that let us see with 200 rupees, let us try, because we are very sacrosanct on this 2FA part. These transactions will happen without 2FA. The message won't come to the customer immediately. So we have kept a limit of 10 transactions, because 2,000 rupees is what we thought is comfortable. So UPI Lite will take care of this. That is part of UPI only. So I am still saying that kindly use this when the activity is made available to banks, and just see what the experiences we can always review going forward. So these are all initial activities. Based on learnings, we always evolve and we always try to increase or decrease the amount. For example, as I was saying, during the pandemic, we thought that people are very scared of using the cards in a contact-full manner. They don't want to touch or let others touch their systems or cards, etc. That is where we increased the limit for a contactless transaction from 2,000 to 5,000. But there again, we didn't say that just because somebody taps and takes your payment away, you are unsafe. So we said that all the banks have to provide on their mobile banking app a facility to switch on or switch off all these transactions, including setting the limits. So it is still very much possible for you to keep 100 rupees as your tap payment limit, or even to disable tap payment from your phone when you are not wanting to use it. So all those options are available. So as I said, safety, security is paramount. Some of these things are not available anywhere in the globe. So many of these nations have to actually learn from us. Many of these players are actually changing their systems to suit our requirement. Even WhatsApp also has made many changes to suit our requirements. I hope I have answered your query about UPI Lite. Yeah.
So this is Sheetal here. So while we all appreciate on harmonization of TAT and the ODR, but it is limited to the technically failed transactions today as it stands. The other transactions of merchants still have a TAT of 15 to 45 days. So I want your views on what are the directions further and how we can further reduce, in the ecosystem so that we can resolve the complaints.
Yeah, that is a very good point actually. See, when we started ODR, it is essentially for a transaction which is made online, and for the activities also to happen online. There is no physical activity that gets involved. But when it comes to a merchant, no, then there is a physical activity of him delivering or not delivering. And the traditional way in which these schemes have been handling transaction is that the merchant has to confirm, or merchant is also given a reasonable time of confirming that the delivery has not happened. So that is where we come into difficulties by not having a timeline for them. And some of the merchants, believe me, have 180 days as well. And it's very difficult because some of them could actually also mean a deliberate mistake or error on the customer's part as well. People still enjoy seeing Jamtara, people still seeing some of those Tamil movies where they are seeing how they can cheat the system. So there are things that are in place. While we are happy to have the ODR system in place for failed transactions, we will also try to bring it for others. But what happens is that the merchant is one segment where we don't have a direct relationship with them, or we can't even exercise our regulatory oversight over them. They are e-commerce set altogether. So we look at the payment aggregators, we look at the people who actually engage with the merchants. So that is where we have recently brought about guidelines for regulating payment aggregators. See, many people are happy to get regulated, many people are unhappy to get regulated as well. So huge hue and cry, many court cases are also being seen by us. We are also a party to many of the court cases. People say that the system is working well, why do you want to regulate them? So we have to see that the ecosystem becomes a better place. So slowly we will have more and more players coming in, we will try to bring a regulation for them. Ultimately the idea is to have a map wherein we say that yes, this is a guy who is not regulated, tomorrow we'll start regulating. This is a player whom we don't need to because there are banks who are partnering with them. So that sort of map we want to have. Slowly everything will come, please wait, it will also see its day.
Thank you, sir. Thank you.
Hello, sir. Sir, it has been a pleasure listening to you talk about the future of payments in India. While we are looking at bringing in the central bank digital currency, our own digital currency to India, the cryptocurrencies are not treated as legal tender. So I would like to understand how would this digital currency be different from the cryptocurrencies, number one. And number two, in the near future, can we look at some regulatory framework for crypto trading in India?
Enough has been said about cryptocurrencies, enough has been said about CBDCs. I don't want to add fuel to the fire already there. But let me tell you a couple of things. One is, please don't look at cryptocurrencies and CBDCs in the same breath. Not true at all. There are two sides of the room. Cryptocurrency is something that is issued typically by a set of private people. I said issued, I have emphasized because there are certain crypto coins that are not even issued. They are mine, there is no issuer. You know who the crypto guy or who the entity or activity I'm referring to. But when you look at CBDC, CBDC is just like a physical currency issued by the sovereign. It will have the same legal backing, it will have the same protection in case of any requirement or any trouble. You can go and get it exchanged as much as you want with a physical currency or for any good. Just like you have note refund rules, you will also have similar refund rules for cryptos, for CBDC as well. Not for crypto. So crypto, we have already said why it is not a good thing, why it is not a good thing for us, what are the pitfalls we have from cryptocurrency. So those things are all a little different. So I'll be happy if two people ask the question. One can ask about crypto, one can ask about CBDC, but not the same person about both, because both are totally different. You can read our Deputy Governor's speech very elaborately. Sir has said about why cryptocurrencies are bad for us. But you will see some things happening about CBDCs because announcement has already been made, so we are working on that. So, yeah, you wanted to ask.
Good evening, sir. It was very nice to hear from you encouraging banks to innovate along with the big techs. Basically, banks have always been within a framework because we are talking about the evolving regulatory framework. And this framework always evolves, and today we know that we have RBI DPSS to be one of the best payment systems. The big tech players are not regulated, from where Madam left out the regulation part of it, whereas banks are more regulated. So we also would like to take the share because the data is published. If you look at share of UPI from banks' perspective, not only Bank of Baroda, all the banks put together, the majority share is from the big tech players. What we feel sometimes, maybe between the regulation and the innovation, what will be the flexibility that banks should be offered? Or is there any evolving framework for there, where if banks have to play a key role, So there should be a flexibility that should be there. And additionally, I want to say that today UPI is having a concentration risk where 4 or 5 banks which support the big tech players and the major volumes are handled. Is there any way forward for it?
See, sometimes we want the payment systems to grow because if you see, India still needs many more systems to bring the entire populace onto the digital fold. Not that that is the only way life has to be, everybody need not be always digital, but there is still plenty of scope. UPI is still, today when I say 26 crore payments we have, UPI has a share of 68%. So still definitely that thought about risk is always there. But the point also is about who are all the people who are party to these systems. No, it's an ecosystem that is open, it's an ecosystem where everybody can come in and participate. You have the third-party app providers here, you have the payment PSP banks here, you have the customers bank here, UPI here, similarly on the other side as well. So multiple people are coming together. So each one can become important, not enough, important so much that it will not depend on anybody else to bring the volumes for them also. I'll be very happy if BOB also does so. Why should a TPAP look to open an account with the bank because he's bringing in money or he's taking the customers through that route? Actually, it can happen otherwise as well. We have many of the bank apps, but the share of these bank app in UPI is very, very low. I actually feel very bad to see that why should that share not increase? Let me tell you, you have raised the issue of concentration, let me tell you, the two major TPAPs have around 82% share. And rest all included, 30-40 people have less than 10% share, Beam UPI included. So it is time for us to see why is it that people prefer some things there. I am not looking at cashback or freebies. Those things are all one-point activities. They won't sustain everything going forward. But something that has to hook on to you, provide everything in that. It's equally possible for every bank to do this. And you have all the products that are available with you. No, everything can be just made sure that this platform provides. You were talking about the lack of regulation for big techs. It's not really true actually. Like big techs, what activities are they providing? Let us take the example if you are talking about big techs like Google or even WhatsApp or Amazon, etc. What activities they are they're just providing a front end. The money is not with them. As I said, money is never with them. The money is with the bank always. Even the transactions are all routed through the bank only. It's ultimately a transaction between one bank account to another bank account. He's only providing the front end, or if the other guy is, let us say, PhonePe this side, he may be a beneficiary, recipient is getting the money through him. It's only a conduit. The same thing can be taken care of by anyone. I said two things. They are not a payment system operator, they are only a participant. So what we said is, any payment system participant cannot store data that he or she gets. So we have taken away one important element that was there for them by use of data. The data is localized. So since he is a participant or they are a participant in UPI, we have said that NPCI should be responsible for whatever happens in UPI. The NPCI should take care of such participants. Tomorrow, if they want to come into some other space, for example, we are also seeing some of these big techs partnering with some banks to provide, say, FD services. Now we have to see where the balance sheet is and whose balance sheet is being used. If the customer is ultimately opening an account with a bank, and this big tech or fintech is providing access to its customers to this bank is also getting money. This bank is also getting more customers onto its board. The bank has to take care. Every time it's very difficult for us to come and step in. So if you want to engage commercially with these people, you should know with whom you are engaging. You should know where the data is. And tomorrow, if there is a problem, can you just move this guy out of the ecosystem? Will you still be comfortable to service the customer? That is all we see. And whether this guy is A, B, or C doesn't matter. Tomorrow we can substitute. I'm very confident. As I said, we are ring fencing ourselves geopolitically as well. We can still take care of some of these things. We do a lot of discussions. Some of these things you will see in our future vision document as well. I cannot say anything more. But we are very, very conscious of all these things.
Sir, good evening, sir. Sir, what is your views on having one bank account, one bank account, one nation? Because it may reduce online frauds drastically for having only one account, because victims' bank is unable to trace funds going in different bank accounts. So having one bank account across the nation will reduce online frauds.
It's like coming to Goa and saying only Air India is better, good, why should we have Vistara? It's not like that, Like it's something we need to give choice to the people. I am happy if everybody is happy with BOB and then opens an account with BOB and says this card is or this account is enough for the nation. It doesn't. Actually, there are so many areas where probably one bank is not able to access or provide services. So we are here to provide multiple options. I am happy if people say that all the cards, all the accounts provide the same features. So what is the need to have multiple accounts? The load on CBS comes down. It is very good. But our intent is to see that the customer is not robbed of any choice or forced to be with a particular bank or entity for life because others are not having or providing access. See, I will tell you now, for example, let us say, why should we have, say, 12 banks in the ecosystem? Tomorrow you can say one bank is enough. That's where some attempts are being made to consolidate. There is other segment which says that no, we should have more banks. Diversification. A point was made about concentration risk. Just imagine everybody having one account and concentration risk. See, I will tell you the other side of the story. It's also very important to appreciate that. We are saying that the banks are very sacrosanct. Banks are very important for every activity. They are the sacrosanct players. And the other players are probably the culprits. Let us assume, just before the pandemic, there was an incident where some of these big players in UPI and other systems as well had a bank account with a couple of banks. And that bank was in trouble. Now imagine, money is safe. Money is not anywhere, it is safe. But the bank is in trouble operationally or somewhere else, you are not able to access that. Everybody came crying to us in the evening late hours. We have to immediately arrange for certain things. Some of these things may not be public. That's where I was requesting Mr. Akhil that I'll be happy if the video is switched off because then I can be more frank in sharing certain things. We had to provide certain things in the night to see that the bank was there, its handle was there, but this was being routed to somebody else. Because the customer here, we don't want him to become grumpy, we don't want him to become edgy. So money was of this bank. The entity said that I'm also putting some money here. Can we have a back-end route to this account? We did. If you remember later, what we also said was, every player can have more than one escrow account because of BCP. Till then, every player we said should have only one escrow account because we can monitor the account comfortably, closely, transparently. Then when we realized that these are the problems, we said for your own BCP, it's okay if you open one more bank account. So we have permitted 2 accounts to be opened. Now, the fintechs are demanding that, please allow me to open 3 or 4 accounts. Then we say, what is the point in having so many accounts? It's going to be tough. Honestly, fintechs may get a lot of money, but fintechs have very much difficulty in handling money. They are good in handling innovation, they are good in handling technology. It's nice they stay at that. The money, let it be here. So we are still saying that we have to be very careful about money. While it is good to have one system, it's also necessary to have BCP. We have to safeguard whatever happens. So it's not necessary, Mr. that in online fraud, always it's because of bank account something happens, or more bank accounts mean more frauds. It doesn't really mean so. A mention was being made a little while about some frauds, etc. Let me tell you, it's like me driving on the city roads, and maybe 10 or 20 times I might have driven carefully and successfully as well. Once if I have a problem, that is what is always highlighted. Let me tell you on date, one fraud is seen for every 59,210 transactions, okay? That means 59,209 transactions happen without any fraud. And this includes even attempted frauds. So let us not be alarmed. Please note that there are systems in place like ODR is there, limiting liability circular is there, the ombudsman scheme is there. If the customer has not compromised the OTP or the PIN or whatever he is supposed to or she is supposed to keep, she or he will get the money back. And sometimes more than what he or she has lost because penalty framework is so stringent. So let's be always confident about our systems. I agree, frauds are on the rise because the number of transactions are increasing, because that is how people are getting hit. How many advertisements we have coming out with, how much of money RBI has spent, how much of money the ecosystem has spent. We recently have also announced the DigiSathi 24/7 helpline. Please go and see the helpline. Everything is there about every payment system. In spite of that, learned people in the grab of earning quick money, easy money, losing money, it's very, very bad to see. College professors, it's something, you never will get money free. You will never get an easy lunch or dinner unless BOB is organizing these events. Otherwise, it's very difficult to get free lunch or free dinner. Yes, please.
Sir, My very small question. Good
Nothing
evening,
is small
sir.
or big, please ask.
Uh, as today also it has been discussed that buy now, pay later, that is BNPL is growing at a very phenomenal speed. And we are having 94 crores of active debit card compared to the 6 crore of the active credit cards. So still we are not seeing the regulatory framework for the BNPL. So when we can have this framework? Thank you.
You saw the numbers being shown on screen, how many people are active, how many people are interested. It's a framework that has to come. Banks are very comfortable in whatever they are doing about lending, etc. Just imagine what will happen to BNPL. Just imagine if I go to a shop to buy a TV, okay? Let's assume the TV cost is 83,000 rupees. BNPL can provide me a facility of taking this TV on credit, and I can get the credit not from BOB alone. I can get the credit from anyone. Just assume that we democratize everything just like UPI was being asked for about big techs, about many banks, etc. For me as an individual, I don't have any loyalty to a particular bank. I don't want this facility to be given by my bank. Anybody can give me. Just imagine for that particular product when I go and buy. If Canara Bank gives me a facility that is better, I'll go with Canara Bank. Ultimately, BOB account of mine may be used to debit. The balance and the money goes to Canara Bank. So it becomes a democratized activity in which I get 10 or 20 options for which I can do a product. Some will say that I can give it for 90 days. Some will say that I can give it 3% for 30 days. It can be in any set of conditions. We have to be used to all those things. We have only said that let us examine all these things. We have never said the regulatory framework won't come or should not come. A lot of discussions are happening. You would have seen about digital lending. People have been gullible. People have lost a lot of money. People have lost lives. So when we come with the framework, we have to be a little careful and we have to balance a number of things. BNPL, in some cases, I don't want to take names, etc. And some people are actively pushing it. It's a different game altogether. And it has to be instant in terms of giving you a feedback about the borrower, about the person, etc., to whom you are giving. And to recover it also is going to be a challenge. So let us see. Let us not be in a situation where because we have only 6 crore credit cards and 92 crore debit cards, we have to have for a credit market. It will evolve on its own. So some of these things I feel sometimes it's better not to push. They will find a niche of their own. See, just think of this thing. There are certain schemes that are being told that if I have a credit card bill of 1,000 rupees, I can pay in 3 installments. That's what some of the schemes say. If you read the fine print, you will always see that the first installment, which is 1,000 rupees by 3, is to be paid by the end of the month. That is fine. The rest too will have interest. Nothing is free. Just is the interest. When everywhere else the interest rate is moving southwards, has the credit card interest rate come down at all? How are we going to answer that? Tomorrow there are going to be huge issues on people saying that I didn't want this, it was pushed on to me. We have to be very clear about what market we are looking at and why. And BNPL is good. There is something else that follows BNPL. Buy now, pay later in time. If you don't pay later in time, you are gone. People don't look at that part at all. They think that money is made available to you easy. Let me tell you one more. Normally, I like mentioning this. You heard one of the speakers mentioning about DAU, MAU, etc., daily active users, monthly active users, etc. They're all nicely used to suit some of their requirements when they want to onboard more people, etc. If you look at the definition of what is active, you will be really surprised. They are interested in some of these. I am not taking names, so please don't think of me targeting somebody. Definitely not. That's not my idea at all. I'm saying they're here for a specific purpose, onboarding more people. We are here for a separate purpose. We are here for good. I was very happy when people were giving freebies, etc. People were asking, what is RBI doing? I said, they're earning money and spending it on Indians in India. Let them spend. Why should we be worried about taking money if it is given free? Please enjoy. So we have to look at all these things. It will happen over a period of time. We have to be very careful. For me, I'll tell you one thing. When a framework is brought in, it has to have lots of facets looked into, and then the framework has to come out. It's very difficult to withdraw anything in the country. Everything will have its own place and time in life. It will happen, don't worry.
Good evening, sir.
Thank you, sir.
Good evening, sir.
Sir, with your permission, can this be the last question that we can take?
Of course, I am your guest, so I am always available, Sonat.
I really appreciate that. So this would be the last question, please. Thank you.
Good morning, sir. My name is Rajneesh. Sir, you were talking about customers having choices and competition in the market. Check. Good evening, sir. Sir, you were talking about customers having choices and competition in the market. So this concept of super app. So the thing is, sir, have we not seen in markets of China and even Singapore that apps like WeChat and Alipay, they have like weeded out smaller participants. So in a country like India, sir, there are two concerns. One is the huge amount of data that they're going to have. And second is, sir, definitely the reduction in competition because of monopoly or oligopoly, or however it turns out to be. So, sir, as a regulator, what would RBI want? Like, it would want such an app to have at such high risks, or it would want like so many small players altogether in the market?
See, thank you for raising this point. One of the facets on which we evolve our regulatory framework is on interoperability. We never believe in one entity or one person-owned system at all. The examples you have taken, they are all having trouble because they are all working in silos. So even if one player is not available or one player doesn't want to make himself or herself available, the people who are using that will have trouble. So in our country, if you see, right from the time we had the ATMs, all ATMs in the country are interoperable. If you look at the QR codes, now we have made them interoperable. If you see UPI, it's interoperable. So one player not available, etc., shouldn't be much of a worry. But we are also conscious of the fact, as was being made earlier, about people having significant share, or one of the few players having more share, etc. That is always a fear for us, so we monitor them a little too closely as well. So we are never for any system where the exclusiveness is a concern for us. So I remember when we were having those instructions for the MTSS guys, Money Transfer Service Scheme, Western Union types, etc., sending in money, they were having certain arrangements where the agents were exclusive to them. That means the agent in India couldn't become an agent of any other MTSS service provider. We said nothing doing. We came out with the instruction saying that no exclusivity arrangements will be allowed. So anybody could be an agent. So if you see now, multiple agents are there who are agents of all other MTSS service providers also. So during the pandemic, again, one of the entities had some issue, but we didn't have any problem because the agents were available for others as well. So generally, we are not at all encouraging any siloed operations. You took the names, earlier speaker also took the names. So super apps, etc., they are supposed to be, among other things, also providing, say, payment services. So many of them may not be relevant to banking, may not be relevant to DPSS, may not be relevant to RBI. But they are provided because people may want to know about insurance, people may want to know about cricket score, people may want to know about the weather, etc. So we should ensure that the apps are functioning. That is where we will come in. If the apps are having latency issues, etc., we have lots of discussions. Let me be candid in sharing with you that some of the bigger players in the country, before they think of certain innovations, they do come and discuss with us that this is what we are likely to bring in. Do you have any idea on this? So we do have an insight into some of the things they are going to bring in. And it's all based on user experience. If the customer complaints increase, then we'll have to look into it. If the customer doesn't complain, we will feel that they're happy. So we are not really worried about some entities having exclusivity or some entities becoming behemoths. Does it answer, or you have a follow-up question?
Sir,
I see you've written down something also. Please ask. So.
Sir, this concept of super app, it might be sacrosanct for customers, but I don't think it can be sacrosanct for organizations like banks and even the regulators.
It's all dependent on what is there in the super app that we call it super. Whether it makes me like not having the need to go to any other app for any other purpose. If you have seen the original Onida TV ad, Neighbors Envy, Owners Pride. Well, that's where all this education, all this advertisement money is being spent. So if you have to install one of the new super apps that is coming, you be at your own risk, mercy. You should be ready to lose data or lose something else if the data is misused. But we will ensure from the payment system side, the loss of data is not grievous. As I said, I have I will be coming in the way of your dinner, so I'll be very happy to take more questions, but you choose for yourself what you want. We can always have these discussions later. We can always have this many more times as well.
Thank you so much, sir.
So I think you've been very kind in taking the time and addressing all the questions of the participants. And for the benefit of all my colleagues, I just want to make a mention that Reserve Bank and especially your leadership has propelled the Indian payments ecosystem to one of the best, if not the best, in the world. And so this is all thanks to you and your vision. So thank you very much, sir.
Yeah, as I said, now even in the Reserve Bank, it is from the top. And it is from 2005, I think, when the governor started chairing the committees for the payment systems. We are really privileged. And everybody is very hands-on. As I said, sometimes the late-night complaints are all received by them because they are all very popular on different media and they get a lot of people targeting them, hitting them. So it all bounces back to us also. And similarly, before any initiative is made, lots of discussions with banks, non-banks, all those things happen. So some of these initiatives have all culminated in us doing so many good things. We'll continue to do good, but of course, as I said, we need banks, we need BOB to be also a very, very important partner. I am very, very keen to, now you have your MD, all your EDs, everyone here. I want to present, sir, the tokenization, etc. We want BOB also to be ahead there. Issuer tokenization we want, sir. My request to all banks will be that please reduce the time to the market for approvals. I want you to be very careful and very keen. When the systems are coming up, there should be no compromise there. But the approvals for certain things, etc., I feel we can all learn by making it faster. Because I am saying that one day late here from our side, there are a couple of people already there moving ahead. And those people do not have any disadvantage of money or intent, they are willing. And it's very difficult to bring back the customer once he goes to the other side. So that's my only request. I'm very grateful for this occasion opportunity. I'm very grateful to see BOB spending heavily onto digital and to the digitalization activities. BOB cards, I always know two of the entities who are separate in terms of card issuance when we look at banks, and also some of the measures that are being looked at. I am sure next conclave, wherever we meet, I will say that BOB is the proudest partner, and you will all be probably celebrating many more accolades as well. Thank you very much. Thank you.
Thank you so much, sir. I request you to please remain on stage. And at this point of time, I'd like to invite Mr. Vikramaditya Singh Kichi, Executive Director, to present a gift and token of appreciation on our behalf. Sir, it truly was so heartening to note how the direct benefit transfers happened seamlessly during the pandemic, especially with your tireless work and with your vision. So thank you so much for that, and of course with banks like Bank of Baroda as well. And I'd also like to say, sir, you have so many, PowerPoints without a PowerPoint presentation. So you're fabulous. We're truly grateful and honored to have you here. Thank you so much. So how are you all doing? Are you all happy to be here? Yes. Yes, I sure am. So I truly feel so honored and privileged to be a part of this. And I'm learning so much, and I'm sure all of you are as well. Okay, so like I promised, we're going to have 2 questions. Now, I want, and I would request you to not say the answers out loud, okay? If you wish, you can jump up, so at least I can see who's jumping up first, because with just hands, it's not possible, right? So jump up from your seat like Jack in the Box, and I'll I'll be able to see who jumped up first. Okay, now this is based on Mr. Nanaya's session, all right? Now, okay, what I want to do very, very quickly, okay, I'm going to quickly ask these questions. All right, which age group had the highest increase in credit bureau inquiries? Jump up, I need to see somebody jump. No, sit down again. I need to see who's going to jump up first. Jump. Okay, the gentleman in the check shirt. Areva, congratulations. That is correct. Please take his details. And one more question. You need to jump. Okay, this is not a jump. Okay, jump is, got it? Okay, the second question. What is the name of the fraud risk management product of Equifax? So jump up. Okay, the sir in the red, yes, blue shirt and, sorry? Correct. Well done. I think I need you all to exercise now, okay, before we start tomorrow's session. Okay, so congratulations. You will be getting your gift cards very soon, and that just shows how much you're paying attention. I'm so proud of you all. Okay, now may I request you all to please we would like to play the Digital Conclave Formation AV once again, please. So if you could just play that for us. How impressive is that? I feel like I'm in a movie theater. I think you can clap louder for this one. Come on. Thank you. So as we come to the end of today's session, we've had a fantastic day, so many amazing speakers, and here we are concluding. So I would like to just, if you may allow me to just speed you up to how things will flow over a power-packed schedule for the conclave for the next 2 days. All right, so what we're going to be having is there's a change in the agenda for day 2. So please make note of this. All right, there's a change in the agenda for day 2. We are going to be having now at the session at 9 a.m., okay, at the Grand Ballroom, which is here, will now be conducted by Mr. Yogesh Agrawal on rapid shift of landing from physical to phygital. All right, and at the Betul Hall, there will be a parallel session by Mr. Anurag Awasthi on focus on scale and profitability of digital payments. Okay, so I hope you've made note of that. And also to inform you, unfortunately, Mr. Sudhanshu Singh will not be able to join us tomorrow due to unforeseen circumstances. So these are the 2 speakers at 9 o'clock. So make sure you're where you need to be. Okay, so now day 1 has concluded. Tomorrow it's going to be a power-packed schedule that begins at 8 a.m. Okay, now at 8 a.m. there's going to be a topic, a workshop that is going to be called Effective Customer Communication, and that workshop is going to be conducted by none other than yours truly. All right, so I'm going to be conducting a workshop, and I'm really looking forward to it. So first thing in the morning, if you feel like getting energized, please come here. Now this session is useful for field functionaries up to AGMs, AGMs, and also the others are free to attend as well. So I'm really looking forward to that. Now, at the end of the day, we're going to end on the note of a gala dinner. So that's going to be super duper fun. Now, in between the beginning and the end, there's going to be several more eminent speakers, both here at the ballroom and over at Betul Hall. So you will have to schedule yourselves accordingly. There will also be a keynote address panel discussions, breakout activity, and a few product launches as well. You really want to synchronize your clock so as not to miss the glittering awards ceremony that's late into the evening. The concluding day, Wednesday, we will see its share of distinguished speakers, but will also include a panel and open house discussion. So with so much to look forward to, we're going to be calling it a pleasant evening for today. I'd like to also inform you, of course, some of you are hungry. So for those of you who have stomachs growling, dinner is going to be served at 8 p.m. Here at Novotel, and the restaurant is Seagull Restaurant, which is, I'm sure some of you would have seen it as you came in. So it's on my left, Seagull Restaurant at Novotel, 8 p.m. Also, yes, tomorrow's session, please, for those of you who'd love to attend, please be here at 8 a.m. sharp, because I'm going to be really looking forward to that right here at the Grand Ballroom. So everyone, thank you so much, and I really want all of you to give a round of applause for yourselves for being so amazing. And please smile, okay? I'd like to see a lot more smiles. Like Sir kept saying, why so serious, right? So smile, you have an evening ahead. We're in Goa. So this is your host for today, Christine Zedek, signing off at Bob World Digital Conclave. And I'll see you tomorrow. Enjoy your evening, everyone. Thank you so much. Good night and God bless.